Good morning, my dear student chartered tax practitioners. Welcome to the CTPR training class. So now I would like to introduce CA Pooja Manjunath, a vibrant chartered accountant in practice. She will train you on applied financial accounting and ethics. Okay. So what is applied financial accounting and ethics? What it is? It all says about what is systematic recording, what is analysis and summarizing, what is to communicate and what the results. So meet the legal requirements, because generally accounts is called as the language of business. If somebody asks what you are doing, then you should produce your books of accounts. Then they must understand. There is no requirement of explaining everything to them. So what are the users? See, if you follow the ethics in it, so it will help all. So tax avoidance concerns will be the major point in following this one. Okay, why all these things are needed? So what it is? Applied financial accounting and all these things are there. So in detail, now I will request Mr. Pooja Madam to take the class. Welcome you, Pooja Madam. Madam is from Bangalore and she will train you. First, you let her present all the things. And if you have anything, you kindly note down all the points and we will clarify any of your points at the end of the session. Okay? Namaste, Madam. Welcome, Pooja Madam.
Namaste, sir. Thank you, sir. Good morning to all. So today learn about the applied accounting. So what is basically an accounting? Can anyone tell?
You can send it even in the chat box also. You chat it. You can send in the chat box what madam is asking. What you feel? What is accounting?
Basic layman language. Day-to-day transaction, debit and credit, financial analyze, identify the business, is profit or loss. Okay. Okay. So I'll take with an example. So in ordinary business, if a person receives a salary, say salary of rupees 1 lakh. So monthly, what would be his expenses? Say rent of 10,000 and day-to-day expenses. Day-to-day expenses say of 10,000 is investments like such as LIC or health insurance. Say 15,000. This is of per annum. 15,000 per annum. Then if he has purchased any assets, like say any furniture, say of 30,000 in that particular month. So in this basic person who is receiving a salary, for him it's a monthly receipt. So we can call as revenue. That's not a business. When he is receiving a monthly receipt, 1 lakh is in revenue, whereas expense, day to day, a monthly expense, this will be in my P&L expense. Expense, investments. So here, whether it is an prepaid, whether it falls in 2 financial year or 1 financial year. Health insurance, after 1 year, again you need to renew. So this will be my expense. furniture will come in my balance sheet, right? So whereas if for a basic, for a common person, salary is an income. If it's a business person, he'll have revenues, whether sale of goods or services, right? So in attachment, operation expenses, if goods means purchases, labor, that will be of wages or employees, and statutory liabilities, right? This will come in my P&L. So if after my P&L, if any profit, I would be investment in assets, or it lying in my liquid asset. Liquid asset is my debtors, which will be recoverable. My debtors, inventory, cash, and if I've taken any loan, then it will come in my liabilities. Loans and any current liabilities such as creditors, then due expenses which need to be paid. Due expenses are okay. So accounting is nothing as recording of day-to-day transactions. Yes. And it helps to know the financial position, financial position of a business. So when I asked a person who is an BSc person who does an accounting in one firm, I asked what is an accounting. He just told it is nothing but plus or minus of whatever comes in, whatever goes out. That's it. He don't know any golden rules or any modern rules also. Plus or minus. And he works only with logic. And even accounts work with logic. So in double entry system, it might get settled. So you will not have any suspense account. But in trial balance, we'll get to know the open items. Open items can be traced in trial balance. Yes. So accounting, so the definition is clearly brings out the meaning of accounting. According to it, accounting is the heart of recording. So how do we record journal entry? Classifying whether it's an revenue item or capital item, summarizing, it's a trial balance. So in trial balance, we'll summarize balance sheet and P&L, you'll get the byproducts in a significant manner in terms of money, transactions and events which are in part. Okay. In terms of money, we need to record. So if there is unforeseen event which may occur, so that needs to be done in a disclosure that cannot be accounted. So accounting is a business language which explains various kinds of transactions. Okay. Next is what is the difference between accounting and accountancy? So next we'll go to the concept of Difference between accounting and accountancy. Yes. So accounting, it is a branch of accountancy. Accounting is a branch of accountancy, and accountancy has a various branches like accounting, cost accounting, management accounting, social accounting, and human resource accounting. So in accounting, what we do, it's a basic traditional method where we do recording, classifying, summarizing, presenting in and interpreting the financial informations of an organization. Whereas accountancy has a branch where we do accounting, cost accounting, which is budgeting and forecasting, pro- and providing the information to the management regarding any events that might occur in future. So management, those decisions will be implemented in accounting and will be followed. And social accounting is with regard to environment. If any hazardous pollution is like will be caused, that penalties or any measurements to be taken, that will be taken care of social accounting. Human resource accounting is your HR, like employee resource utilization, and their benefits to be taken care. So, okay. So accountancy implies a systematic body of knowledge that prescribes accounting principles, conventions, techniques which are to be followed during the accounting process. Okay. Explains nature of work performed by accountant. Okay. Profession pursued or opted by the accountants. Okay. Profession. Okay. That will be of accounting, cost accounting, management accounting, HR. Concern partial part. So in accounting, we don't require any management decisions to be known to us. So whatever the day-to-day transactions, that to be recorded by the executive level. Okay. But both theoretical and practical. So here we take all types of additions and any effects that would have on the accounting. And accounting is a narrow base, is a wide base, financial statements, principles, and techniques. So, what are the objects of accounting? So, as everyone told, it's a proper recording, calculate the profit and loss, financial position to keep effective control over the business control. So, if I don't know day-to-day transaction and my day-to-day business, whatever the profit and loss, I can't take any control. So if my business is running in a loss, and though I'm giving huge discounts on any particular product, then I'll be ending up in my financial year in loss. So to provide financial information to the interested parties. Okay. And accounting cycle is first you'll identify the transaction, identify. So identify with the base of source documents, whatever vouchers, bills, invoices, or bank statements, any transactions has been affected online. So first we identify, then we do pass a journal entry in a chronological order, that in day book, posting and balancing that, preparing a trial balance. So any rectification errors, that is open item in double entry system, it gets in double entry system, it gets nullified at the base level, balanced, but the rectification can be done while cross checking with trial balance. Yeah. Yes. And preparing the financial position. So these are the steps what we have just now discussed. And first, record, classify, summarizing, analyzing, interpreting the results, and communicating. So bookkeeping and accounting. Again, there is a comparison. Bookkeeping is recording the company's financial transaction as and when they occur. Okay, it is just recording. Sorry. Bookkeeping is recording the company's financial transactions as and when they occur, whereas accounting orderly recording and reporting the financial affairs. So in few companies, whereas in MNCs, bookkeeping process will be done where each process will be designated to uh, particular concerned people, and they'll be taking care of only those transactions or those processes, whereas accounting is all over the accounts. Your financial positions will be taken care in that. Then and involves recording and classification of business transaction, and recording, classifying, and summarizing. Yeah, summarizing. So I guess you come across AR, AP, accounts payable, accounts receivables, general ledger processes. So for each process in big companies, they'll be designating a separate individuals. So they'll be taking care of only those transactions. So when they get the transactions, first they record, classify the business transactions. They just classify and record and rectify any errors, whereas accounting is until the end process, that is summarizing, analyzing, and interpreting the financial data. So stages is, it is the first stage in the process of accounting. So it is a second and final stage. Nature of task, routine and clerical task, and it is an analytical task. So in financial, so when you summarize, we'll be doing aging reports. So trade receivables and trade payables aging reports will be done. Whereas more than 1 month aging report is nothing else amounts receivable within 1 month, receivable with like which is outstanding more than 2 months, 3 months. On the basis of those aging reports, the receivable teams we should follow up. Okay. So next objective is maintaining a proper recording financial transactions with various net results of the operations. So supervision is bookkeeping does not supervise and check the work of an accountant. An accountant checks, supervises works of an bookkeeper. So maker and checker concepts will be applied. Bookkeeping gives a day-to-day details. Accounting gives the entire year details. Okay. So as I told, accounting, the branches is financial accounting, cost accounting, management accounting, social responsibility accounting, human resource accounting. So whatever we have discussed, that next, the fundamental characteristics of accounting informations are, first is relevance. So whatever the information which I get should be relevant and faithful representation. So I can't do any fraud or any what you say, I can't inflate the sales. Okay, then I can't be relying on those books of accounts. And variability, timeliness. So this year accounting should not be done next year, just based on any bank transactions or any based on the GST reports. We can't do the what accounting. So that should be done on day to day and timeliness. And whenever required, that should be given to the interested parties, understanding and comparability. So when we do any accounting, so when we are going for any merger or acquisitions, so it should be on those basis, comparing the both the financials. Okay, and that should be followed on same, like you should follow the accounting standards. And so what is cash basis of accounting and what do you say? Can I get the difference between cash basis and accrual basis of accounting? Difference between cash basis and accrual basis. Can anyone tell? Um, I guess Zoom user. So can just tell me the difference between a cash basis of accounting and accrual basis? Kalyan Shetty sir. Okay. Cash received. Okay. Okay. Cash received on spot, receiving the money or its worth, while accrual is receiving the money in upcoming days. Okay. Yes. And cash basis records transaction when receipt and payment, whereas the accrual we record when expenses is incurred or revenue is earned. Yes. Liability due. Okay. More answers to one exam. So I can give an example. So when I have seen one book of my grandfather. So he used to have an agriculture land. Okay, agriculture land. So whatever he does in these 3 months, so he has received some amount, say of 50,000 in those days. I can say in 1990s. So he have received say five, not five. I can't give such a big amount. Yeah. So on first he has received 5,000. So in that whatever the labor, seeds, say of 1,500 he have done expenditure and 500 towards seeds or any household expenses he have done 1,000 rupees. So any miscellaneous. So say 500. So in this method, he was not having any tracking. Okay. If any emergency, he was using the same amount. From 5,000 only, he used to use the amount. So in this method, there is no accuracy. Is there is any accuracy? There is no accuracy. Whereas, so he has received an actual basis he has received from first 3 months, whatever the income which he has received, in that income he have done the expenditures. Whereas on other hand, now today, so I'm selling a goods worth rupees 50,000 to Mr. B. But Mr. B has don't have money to pay now. So he tell or he promises me to pay me after 3 months. So this so he promises me to pay after 3 months. So here one is balance sheet, one is P&L. So this is my sales. So I am accruing today. So when he's promising, he'll be my trade receivable. So 50,000 I'm eligible to receive. So if Mr. B says after 3 months, no, now I can't pay you, give me some discount. So discount, so that I'll pay you. I'll pay you say 45,000. So I'm receiving 45,000. Giving the discount is my expenses which I'm bearing. I'm forgoing my profit. So here my trade discount 5,000. So I've accrued already 3 months back, right? So now I'm saying no, he's not giving me the 5,000. He's saying that he'll settle me at 45,000. That he's not able to pay, or he has incurred loss. Okay, so that time my balance 5,000 will be my trade discount or bad debt, which I can say. So what do you say? So cash system and cash basis. Yes. So it is that basis of accounting where any income or expenses recognized only when there is an inflow or outflow of cash. That is my old example where my grandfather had an agriculture land. What on his actual receivables, he will clear on his actual receivables. He'll take as a revenue and do the expenditure. If you don't have money, you won't do any of these expenditures. Okay. Whereas accrual, it is that business of accounting where an income or expense is recognized when it is earned, incurred, irrespective of time when is paid. So where my goods I've sold to Mr. B, where he told that he'll promise that he'll pay after 3 months, irrespective. So I'm realizing and creating as a my income. Okay. Nature cash basis is simple. If I have money, I'll do expenditure. Else, no. Accrual is complex. Complex in nature, you need to be tracking those receivables. Do the aging analysis. Okay. Accounting system followed. Cash basis of accounting is followed in single entry system. Example in provision stores or small businesses, they do a single entry. As and when they realize the money, that time they realize the revenue, inflow and outflow. Where double entry system accounting, where each transaction has two outcomes, one debit and credit. Variations in our income statement, relatively low variations. Because on cash basis it is realized, but here it will be a higher level of variation. So either at the end of financial year, you may think that these funds are not receivables. So bad debts can be created. So next, accrual basis. So example, if you have paid any prepaid expenses of that financial year, which overlaps to two financial year, that time the portion will go to my balance sheet. Balance sheet asset side prepaid expenses. Example like newspaper subscriptions. Okay. And auditing of financial statement under cash basis accounting, financial statement cannot be audited. Okay, financial statement can be audited only when they are prepared on accrual basis. Suitable for cash basis of accounting is suitable for micro and small business. For large corporates, so with like accrual basis is suitable, because unless you give the time period for the repayment, you can't increase your sales. Okay, and users of accounting information are, first is our owners and stockholders, our directors, managers, many internal departments, officers, employees. Officers are like IT department. If any notice, if you receive, in that time you need to produce your books of accounts to them. Okay, my external users will be investors, creditors, and lawmakers or economic planners, government regulations, trading partners, laborers, suppliers, tax authority, chamber of commerce, competitors, auditors. Okay, competitors. So to compare the businesses, so the competitors also would be required your what financials, unless you are registered under ROC. If you are a company, if you are a company, your financial statements can be disclosed to the public. Okay, under ROC portal. So they need to pay a certain money, and they can take your financials and go through with your financials. Okay. So next we come to the internal users. Internal users, owners, directors, managers, officers, internal department, employees, and internal auditors. Similarly, external users. An advantage of accounting. So as we discussed, it's maintenance of permanent business records. So all my past events will be recorded. At any point of time, I can go back and check regarding those transactions. Systematic recording on a chronological recording, and decision making is very easy. So valuation of business, if I'm going for any merger or sale sale of my business, that time the valuation of business will be very easy. Helps in raising loans. So if I have a financials and books of accounts ready, so I can go for raising loans, funds, okay, evidence in the court. So if any dispute occurs, our books of accounts will be evidence, and for the any transactions complying with law, preparation of financial statement, comparison of results. So between two similar businesses, can compare audits, effective management, cost control, inter and intra comparison. Inter and intra comparison. That is, if a company has a holding and subsidiary, okay. So in those cases, we can compare the results, or between two similar business. You can compare the results. Prevention of frauds, errors, and forgery. So when accounting is maintained, so books of accounts is maintained, so frauds, errors can be minimalized. So day to day check can be put, and controls can be put. Limitations. Recording only in monetary terms. So as I told, contingent event. Contingent event is any unforeseen event. So or there is any dispute or case against the company. Against the company. In that case, I can't disclose in monetary terms. I don't know when the case gets settled. Okay, so that will be as per AS1 disclosure, but it cannot be in my books of accounts. Time value of money. So example for time value is, so I'm have purchased an asset. So that is worth of 1 lakh when I purchased, like say land. So after 10 years also, will it be 10 lakhs? Sorry, 1 lakh? No. It would be some appreciations. Okay. It might be approx 10 lakhs. So this inflation we are not taking care in accounting. Okay. And it will be recorded in historical base, recommendation of alternative methods, restraint of accounting principles. Okay, on alternative methods cannot be recommended. So once, if one financial year you're following one method, in second financial year you can't follow different method. Same, there should be a consistency of accounting, historical cost concept, ignorance of social cost, environment effects. Okay, any pollution occurred because of any manufacturing, those will be ignored. Window dressing. So what you say, window dressing is like fraud, making a fraud, or what you say, you can't inflate the sales. Okay, when you're doing accounting. Next basic terms. Can I get to know the basic terms which you come across in accounting? Please put in a chat box. Yes, Satyam Computers. Okay, basic terms in accounting. What are the basic? Debit? Yes. Transactions? Yes. Assets? Yes. Still more, please. Provision, expense, assets, liabilities? Yes. Income and expenditure? What comes in, what goes out? Basic term. Good. Accrual, debit, credit, loan. Okay. History of financial transactions, prepaid expenses, receipts. Where is my trading account? Capital expenditure, yes. I'm getting the answers only of P&L account. What about trading account? Okay, purchases, yes. The yeah. Reporting financial transactions, yes. Goods sales, gross profit, yes. Indirect expenses to know the gross profit. Oh, capital. What about my capital? Yes. Yeah. So basic accounting terms are same as all told. My business transaction. So what my day-to-day transactions? Day-to-day transactions. See, in this you may get any MCQs also, multiple choice questions based on your basic accounting terms. Okay. So like example, they may ask any asset which is in liquid form. So you would have furniture, land and building, and what you say, trade receivable and cash. So my first priority will be on liquid asset will be my cash. Then second, my trade receivables. Okay. So those types of questions will be asked from these basic accounting terms. then stock, debtors, creditors, vouchers, discounts. And next, what is capital and revenue expenditure? The basic. Daily description, yes. Banking transactions, yes. Okay. So next we are coming to capital and revenue expenditure. Okay. Simple logic is capital is your investment. Okay. And revenue is for your day-to-day transactions. So your investment, I'm investing in my plant and machinery. Can I invest in stock in trade? Stock in trade is a capital or revenue? Capital. Stock in trade. I'm saying inventories. Capital, current asset. Yes. So in investment, capital expenditure, I'm saying capital expenditure. Stock is not my stock is not my capital expenditure. Stock is my revenue. Stock in trade, I'm saying. Okay. If I'm investing in shares as an investment, okay, will come in balance sheet. Okay. So whatever the balance sheet item except current asset will be my capital expenditure. Revenue expenditure will be my stock or my any wages, labor, day-to-day transactions, whatever the expenses which is incurred, okay, such as electricity and power. This will be of my revenue in nature. Okay. And one more thing is um we will discuss here. Okay. Capital expenditure incurred to acquire any fixed asset. As I told, plant and machinery or land and building, capital lease, office equipments, computer equipments, these are all fixed assets. Okay. Software development, purchase of tangible and intangible assets, goodwill, my goodwill, and such kind of any value addition in the business with the purpose to enhance the income. The expenditure which benefit cannot be consumed, okay, or utilized in the same accounting period. So if I purchase a computer, so I'll be using more than 1 year. More than 1 year. If my plant and machinery might be 10 to 15 years, so these cannot be consumed in 1 year. So we'll be claiming depreciation, but will be a fixed capital expenditure. Okay. An expenditure incurred to acquire fixed assets. Okay. And capital addition to any fixed assets which increases the life or efficiency of those assets. Okay. Like you have two examples. So I have a land and building. Okay. Which is of 3 floors. 3 floors building. Okay. Floor 1, 2, 3. I was receiving 10K every month. Okay. This is my revenue income. I had a repair of, for that year, I had a repair for, say, 15K. Okay. And one more is I constructed fourth floor. Fourth floor I constructed. So cost became my 20 lakhs. Cost is my 20 lakhs. Now I'm receiving the additional income of 20K. Okay. In this case, so cost of 20 lakhs, 20 lakhs and repair of 15K. So can you give the difference whether it's which is revenue and which is capital? Can you just give in a chat? 20 lakhs is capital. Yes. Lakhs is capital. Yes. Why 20 lakhs is a capital? 15K is a revenue expenditure. Yes. Okay. Yes. Yeah. So here my 20 lakhs has increased my efficiency of earning 20K, 20,000 per month rent. Whereas 15K, 15,000 is my maintenance. Okay. Even though I don't do 15,000 repair and maintenance expenditure, I'll be earning 30,000 per month. But here, if I do 20 lakhs expenditure, I'll be earning 20,000, what earning, additional earning. Okay. So in capital expenditure, when you are doing any increase, so you have done, so you had a modern, old traditional plant and machinery. So a person told that you fix an 5 HP motor. You instead of 2.5 HP, HP is a power consumer, HP power motor. You consume 5 HP motor. So you'll increase your production from 10,000 10,000 per hour to 20,000. 20,000 per hour. So in that case, whatever the expenditure incurred will be my capital, not the revenue. So that bifurcation we need to do, especially in this last point. So revenue expenditure, as everyone told, will be of my basic day-to-day operation. Revenue, that is wages, freight inward, outward, administration expenditure, assets, assets purchased for resale purpose. So that is my goods. And then repair and renewal expenditure. So keep in mind the last point, that is fixed asset, which increases the life or efficiency. On this, we will be getting the questions majorly. Okay. So sometimes revenue expenditure will be treated as capital expenditure. Okay. So that is raw material and consumable. If those are used for making a fixed assets. Okay. So I'm the person like a real estate person. So construct my main business is construction. So whatever the raw material I used to purchase to my what clients I've purchased for myself and constructed a small office type. So that time, whatever my raw materials, consumables can be my fixed asset. Okay, it does not go to my P&L. Okay, carries freights. Okay, repairs, preliminary expenditure. So initial startup for the any startup of business, whatever the expenditure will be incurred, like advertisement expenditures, those preliminary expenditures can be treated as capital expenditure and can be apportioned to 5 years, a certain period. Okay, and interest on capital, if paid for construction work before the commencement of production or business. Okay, in borrowing costs, so unless if your business is not commenced, okay, the whatever the interest we are paying on borrowed amount will be accumulated and will be as a capital expenditure. Okay, development expenditure, wages, Okay. The difference is incurred for capital expenditure incurred for acquiring of assets to enhance the capacity of an existing assets results in increase in lifespan. Okay, as instead of 2.5 HP motor, I'm what implanting the 5 HP motor. So I'm enhancing the capacity of the manufacturing and resulting in my increasing in lifespan and increasing in my production. Okay, revenue expenditure maintenance. So somewhere there was a wear out. So I've used a few screws, few repairs, few oiling or greasing of those machinery. So that time it will be an revenue expenditure, and this is of long term. So like installing the 5 HP motor is long term, or repairs like monthly or yearly maintenance will be my short-term revenue expenditure. Value enhance the value. Okay, does not enhance. Even though I don't get repaired regularly, it does not get enhanced and enhanced for my existing assets, and has a physical presence. Except for intangible asset, does not have physical presence. Okay, it gets used off. Okay, whereas physical presence, so I have replaced the motor. There is a physical presence. Occurrence non-occurring in nature. It is not. It occurs once in a time. It does not occurs regularly, recurring in nature. Okay. Availability for capitalization, yes. Revenue, no. It will be debited to my P&L. Impact of revenue, do not reduce the business revenue. Okay, and reduce the business revenue. So impact is, so here if I do capital expenditure, if I do capital expenditure, so it increases the my business efficiency, whereas revenue, it will be deducted from in my P&L. So it's decreasing my profit. Potential benefit, long term, short term. Appearance as asset in balance sheet. Okay, it appears in the income statement. Okay. Similar way as capital expenditure and revenue expenditure, there's a comparison between capital receipts and revenue. So capital receipts are in my balance sheet, where it is in trading and P&L. So whatever you sale of goods or services, okay, nature non-occurring, it's in occurring in nature. So example for capital receipt is like selling off of my fixed assets, or loan or any loan taken from the bank. Okay, they are not received in the course of normal business activities. Okay, capital receipts, whereas revenue, they are received in normal course of business activities. Year of benefit, the company can derive the benefit of current year as well as in the future. Company receives benefits in the current year only. So revenue, if there is a sale of goods, the benefit will be received in current year only, not the next year. Next, need improving the working capacity of the business expansion, maintaining the existence working capacity, and matching concept, not matched with capital expenditure, matched with revenue expenditure to know the profits. Okay, this is so capital receipts will be in it is not a regular occurrence. Any in once in a time it gets occurred. Okay, like selling off the fixed assets. So it does not get matched with our capital expenditure. Whereas to know the business results, revenue, so revenue receipts minus revenue expenditure we do to know the financial position of the business. And future obligation, in some cases there is a future obligation to the return to return the amount. There is no future obligation in revenue receipts. Okay. So can I get to know what is deferred revenue expenditure? So what is deferred revenue expenditure? Refers to advance payment a company receive for products or services that are delivered or performed in future. Okay. Penalties? No, sir. No. Depreciation? No. Deferred revenue expenditure, I'm saying. Money spent during one accounting period with intention to creating revenue in future accounting period. Yes, sir. Yes. Prepaid transactions? Yes. Revenue period which is deferred to more than 1 year? Yes. Yes. Prepaid expenditure expenses incurred. Insurance. Yes, good example for deferred revenue expenditure. Advance payment. Yes. Yes. Audit fees. Deferred. So deferred for more than 1 year. Audit fees. Okay. Prepaid expense. Yes. So, so, in accounting, I got to know that one software I can develop software. Okay, so I invested in a software for 2 years. For 2 years. Okay, that too with just the invoice will be with barcode. Just one person is enough. My logic is so much. Only that much that the invoice will be with barcode. Okay, once you scan that invoice, so that automatically goes plays in my P&L. No need to pass any journal entries. Okay, once the invoice is run. Okay, and even that it can automatically just in one press it can do for GST computation and my financial year position. Okay, and if any addition is there, my fixed assets, it gets done. Fixed assets, and if that itself will calculate the depreciation as per Companies Act or Income Tax Act. This is my software where I have invested almost 10 lakhs. First question is, now, can I claim in current year as expenditure? This is my software. Right now, it's my software. Can I claim as yes, capital expenditure? Okay. Why I have invested 10 lakhs? When on my one click, I'll get to know my P&L, GST computation, everything. 50%. Okay. Yes, capital expenditure. Okay. Yes. So I can't debit to my P&L. So whatever I'm receiving the benefit of this software in my multiple years. Multiple years. So I'll be apportioning in number of years. Okay. So next example is one more example which I can give is one more example is have done the subscription or say I've taken insurance to my business in the month of September. Okay. You get business insurance also where any unforeseen take place. So any loss, fire, etc. So the insurance people will support you, like reimburse for any losses incurred, okay, in the month of September for say for worth of 1 CR. So I've paid the insurance amount of 50,000. Okay. So the renewal is next September. So 24. So 25th September is my renewal. So here I'm receiving the benefits in 2 financial year, right? So September I have taken. So 6 months. So 25,000, 25,000. Okay. So at one go, 50,000 I can't debit to P&L. So first, what would be my journal entry? So first will be my expenses. What? Insurance. Insurance is my expense. So cash is going out of the business. So cash is 50,000. Now, first insurance amount for this 6 months, 25,000. Prepaid expense, 25,000. So this prepaid expense in my financial year 2025 will be debited to P&L that time. So that time, what will be the answer? Journal entry, insurance account, debit to prepaid expense. So 1 year I've created an asset, 25,000 prepaid expense. And 1 year I have credited. So nullifying effect. Okay. So what is prepaid revenue expenditure? Whatever the revenue expenditures incurred. So where the benefit is derived in more than 1 year is known as deferred revenue expenditure. So that is revenue expenditure holding something back for a later year. So benefits are derived in a multiple future accounting periods. Okay. So examples are, as I told, for insurance, prepaid expense, exceptional losses, okay, and services rendered, okay, like research and development. So I've done a research and development. That services I'll be receiving in, say, for next 5 years, that software will be there for me. Okay. So that I'll be apportioning in 5 years. Okay. And fictitious assets. Okay. That is preliminary expenditures that I'm deferring for certain 5 years or 10 years. Okay. Or any advertisement expenses, initial advertisement expenses, use advertisement expenses. Okay. And examples related to deferred revenue, magazine subscription. If I'm at other party, magazine subscription. Okay, if I'm the seller of the magazine, I've given the subscription. So yearly subscription they have given to me. In that time, revenue should be deferred to next financial year. Software leasing, okay, have purchased Tally software in the month of September. The next renewal date is in month of September, next year, September. So 6 months revenue should be deferred to next year. Okay. Auto leasing. So, and gym memberships commonly used. If I'm running a gym, so I'm giving the membership for 1 year. So example, cult or fitness centers where they give 6 months membership, 1 year membership, where you need to pay 6,000 or 12,000 rupees for these membership. So in that cases, they need to defer that revenue to next year. Okay. So source of documents. So as all know, the first source, sale invoice, sales vouchers, receipts, checks, invoices which we create, purchase, vendor gives us. These are the sources of documents to to record the what transactions, receipts, like few what receivables will be on like online bank transactions. So with bank statement, we need to check the receipts and record checks. If any checks are post-dated, PTC checks also given. So these are the records: bank statement, credit memo, purchase orders, delivery notes, former base, payroll records for my HR expenses, expenses report, contracts and agreements. So contracts, rent agreement, rent example is rent we are paying every month. So say of 1 lakh. So that if agreement is there, so on those source basis, we can pass the entries. Okay. And next, theory base. Okay. While accounting, what are the major concepts which we follow? Generally, yes, bank statement, passbook. Yes. So theory-based accounting. So what are the assumptions which we follow in general accounting? In chat box, I didn't get any answers still. Yes, going concern. Yeah. So this year I've started my new business. So I foresee that even next year also I'll be continuing the business. Consistency. Yes. Consistency also. Yes, madam. Accrual. Yes. Matching concept. Yes. Consistency. Stock book. No stock book. Money measurement. Yes, sir. Dual concept. Yes. Substance over form. Materiality. Yes. What about the accounting period? In India, which accounting period do we follow in 1st April to 31st March or 1st Jan to 31st December? Assumption frameworks. Yes. Yes. 1st April. Yes. Financial year. So accounting period concepts we are following. What are the conventions? Okay. Yes. Party reconciliation statement does not come in my principles. Okay. So yes, let's start. Accounting concepts, as everyone told, so each business will have certain concepts, okay, to prepare. So without any consistency, I can't start my accounting, right? So like example, this year I have done fruits business. So next year I can't go for clothing. There should be some consistency, right? Consistency to be okay. If I'm starting with number of subsidiaries or number of line business is okay, but shifting from one business to another business and then asking, so last year I had a profit in my fruits, say 50% profit, 50%. Why in my clothing I have only 20%? So each line of business will have different profits, and there should be a consistency, and same comparability should be same line of business comparability should be there. So accounting concept is a process helps to record, prepare and record the financial transactions in an organization along with the organizing the bookkeeping process. So I can't continue in same books of accounts from fruit business or vegetable business. I can't shift to clothing business. My stocks will get changed. This is my perishable goods. This is a non-perishable goods. Consistency and comparability. Between fruits business and clothing business, I can't compare. And accounting concepts will help in risk management, support in decision making, credibility. So, first year I have done fruits business, second year also I am doing fruits business. So, here I can do the comparability. Risk management. What is my risk? It is a perishable item. So, I need to sell immediately, right? Within 3 to 4 days. Okay. My shelf life is within 3 to 4 days. Support in decision making. So what type of fruits I need to keep? So where is the profit? So what season the fruits get sold? So this is the my decision making. Credibility. So if I have kept in the fruits business, rotten fruits, spoiled fruits, will the customer come? No. So fresh fruits. So that credibility should be maintained. Okay. So next, that is in accounting concept, that is first going concern. So I assure that in future also I do the same business entity. There will be a business entity. Cruel, yes. Money measurement, it measured in terms of money. In terms of money, accounting period, my from 1st April to 31st March. Dual aspect, double entry. Revenue realization, immediate or within 3 months, or how the revenue is realized. Okay, accounting period concept. Okay, 2 times it has done. Accounting period concept. Then conventions, co- conservatism, materiality, consistency, full disclosure. Any disclosure to be done, that should be done in my disclosure. AS1, fundamental accounting assumptions are going concern, consistency, cruel. Okay. So accounting policies. So in this process, my accounting policy has come into place. That will be discussed tomorrow. Okay, in accounting standard. So next is my approach towards passing the journal entry. So whenever any items comes, first we need to classify whether it is an capital or revenue item. Okay. If it is an capital item, again 2. Revenue item, 2. Got it? Second. So we will be following modern approach, and it's very easy in modern approach. So any item, so first I'll think whether it's a capital or revenue. Okay. Capital item means it will go to my balance sheet. Revenue item means will go to my P&L. Yes. So if it goes to my P&L, so if it's an expenses, then my income. If my expenses are increasing, I will debit. Example, purchase of goods, repair expenses paid, electricity expenses paid. Okay, bad debts. My expenses is increasing, so I will debit to my P&L. If there is an decrease, I will credit. Example, purchase minus purchase return. Instead of crediting, I'm doing minus in my purchase only. Okay. Income. If my income is increasing, I'll credit to my P&L. So my T balance sheet, my revenue here, my expenditure. Okay. If my revenue is decreasing, like sales return, I'm debiting. Or trade discount or bill discount, which we have done, debit. Okay. So if it is a balance sheet item, if my liability is increasing, My liability is increasing, such as I've borrowed the loan. I've borrowed the loan and created a liability. So if my liability is increasing, I'm crediting to my liability, crediting to my balance sheet. If it's decreasing, repaid my loan. Okay, that is a debit. So example is, so repayment of loan. So my cash is going out of the business. So cash is decreasing, cash account. So I'm repaying my loan, liability, debit. So my liability is decreasing. So I'm debiting. So my cash is going out. So I am crediting. Similarly, if it is my asset, if it's my asset is increasing, like purchase of fixed assets. Okay, debit. Cash is coming into the business, debit. If it's going out, cash is going out of the business, I will credit. This is a simple concept, double entry system concept followed. Okay. So, any doubts here? Creditors value increasing. Okay, no. Okay. Can we take up some questions?
Yes, madam, definitely.
Yeah. 1 second. So, my first question is, that the revenue and expenses of company are displayed in which statement? So I'll just share. 1 second. In P&L, yes. Options are here. My first question, the revenue and expenses of a company are displayed in which statement? Balance sheet, cash flow statement, income statement, none of the above. Cash flow, revenue and expenses of a company. So expenses can be non-cash also. Profit and loss account, income statement. Option A, Uma Shankar sir. Sir, balance sheet, we won't show any income and expenses, sir. It's in option C, income and expenditure account. Income statement, yes. So next, second question. The main purpose of financial accounting is option A, to provide financial information to shareholders, to maintain balance sheet, to minimize taxes, to keep track of liabilities. Option A, okay. All type of options. No. What is the main purpose? My main purpose. What's my main purpose? What is my main purpose? Yes. Yeah. 1 second. Here. Recording, classifying, summarizing, And communicating. I need to communicate. Communication. Communication to my shareholders, right? We have spoken here. Uses of information. Okay. In that shareholders, first main purpose is to communicate to the shareholders. So the main purpose to provide information to the shareholder, to provide information to the shareholders, to maintain balance sheet. Yes, of course, accounting is purpose for maintain balance sheet, but ultimate the end user, we need to communicate to them. Okay, what type of balance do the asset accounts have? What type of balance? Option A, contra. Option B, debit. Option C, credit, or all of the above. Option D, all of the above. No. What type of accounts? A, B, and C? No, no, sir. No. Debit balance. Yes. Debit balance, sir. My asset is coming into the business. Asset is coming, increasing my more approach, increasing my asset. So debit balance. If asset is going out of the business, credit balance. Okay. And every time in balance sheet, asset side will be debit balance, liability side will be credit balance, right? So contra entry is only with regard to bank statement accounting between two banks or cash accounting, cash between cash and bank. Okay. So next answer is debit balance. Next question is the kind of debt which are needed to be repaid in short term. What kind of debt to be repaid in short term? Fixed liability, current liability, depreciation asset, or intangible asset? Fourth question answer, current liability. Yes, almost all are correct. Current liability. So you have only certain period which might be within 3 years or anything. So next, what is the supporting evidence in the business transactions called? Journal, ledger, voucher, contra voucher. Question number 5. What is the supporting evidence in a business transaction? Voucher. Yes. Yes, sir. Based on the source documents, vouchers, bills, purchase bills, will be passing a journal entry. This journal entry will lead to each ledger statement, reconciliation. Okay. What are outstanding expenses? Question number 6. What are the outstanding expenses? Option A, expenses which are not paid off in a current balance sheet. The necessary purchases that keep a business going from day to day. The type of expense that is due but not being paid. None of the above. None of the above. Okay. Here is small tricky. I'm asking about the outstanding expenses, not the prepaid expense. Paid, the expenses which are not paid off in a current balance sheet. Okay. Type of expenses that is due but not being paid. So option C will be my answer, which is due but not paid. Okay. So next, Question number 7. What increases the asset and equity? What increases? Yes. Revenue? No. Answer is fresh capital. If I get the fresh capital, I can invest in my assets. So usually capital or equity fund raised in order to do any acquisition of any assets. Okay. But whereas debt paid off means my liability is getting decreased. But any asset is not coming into the business. Revenue, which is operational. Okay, in these three, fresh capital will increase my equity. So last year it was 1 lakh shares. So this year it became 2 lakh shares. So I've raised for 2 lakh shares the fund and invested in my assets. In what order data is entered into the journal? Last question. B, no. Numerical order, we don't pass the entries. Yes. Option A, chronological order. As in when the transact event occurs, the entries will be passed. So in our day book, so in Tally in day book, you can see some will be journal entry, bank entries. So in a chronological order, the entries will be placed. That's it, sir. That's all. Any doubts up to here?
They have texted in the box, madam. Some of the questions they have
Options.
given.
No, sir. Options we were discussing, no, sir.
Ah,
Yes. Why revenue will not increase equity? So revenue is operational and
Capitalization of
equity,
revenue with expenditure net of the earnings
yeah,
will only be go
earnings.
to your equity if it is permitted.
Yeah.
Madam, I will just take only one slide here, madam,
Yeah, yes, sir.
with your permission.
Yes, sir.
See, namaste, dear members. So, what actually we have to understand, accrual means recording of evidential information first. What is going to happen? Any changes happen to it? Okay, that is all later. First, accrual means recording the evidential information. Just simple example. I have already sold. So you have to enter that invoice as sales. Okay, whether he is going to pay you or not is a next part. So that is called accrual. If we don't pay, so you have to reverse it. So that is called accrual. In cash, that will not happen. If you raise an invoice, if he gives money, then only you are going to record it. So just example I have given. So what we have to analyze while making this accrual system of bookkeeping is whether the information is to be recorded as income or an asset, expenditure or a liability. Why? All receipts are not income. In the similar manner, all payments are not the expenditure. Am I right, madam?
Yes, sir.
Yes. So this is what actually we have to observe. Primarily, we have to put our thought process, whether we have to record it as a income or expenditure. Whether we have to, if not income and expenditure, definitely that will fall under the quality of asset or liability. So only these 4 golden aspects we have to first think while recording. So then automatically what is income, so what type of income different, what expenditure, what kind of expenditure different. So even an asset is an expenditure, so that we will analyze separately. Okay. So the income may become a liability. Okay. The payment may become a liability. All these things we will analyze. Okay. Thank you, madam.
Thank you, sir. Sir, I've shared the PDF of this session also.
Okay.
Even in
Any
mail also,
people
I'll be
you
sharing.
want the session 1, you can now only download, because that is not available once the session is closed and anybody leaves the meeting room also. You can download if you want that one. One practical question, madam, related to revenue expenditure or capital expenditure. Please unmute speakers. Yes, we will unmute, don't worry. We will give you 5 more minutes extra time. So however, we have a long session, don't worry. If anything is left, don't get annoyed. You will all get proper
Relating
opportunities
to
to get
revenue expenditure or
clarifications
capital
to all your
expenditure.
queries. Okay. Kalyan Shetty sir, I have unmuted you. Kalyan Shetty sir. Okay. Lokesh, I have unmuted you.
Sir.
You can talk.
Sir. No problem, sir. Everything is right, sir.
Okay. Atish Pagre. Atish Pagre.
Yes, sir.
Yes, you have raised your hands. If you want to talk, then only you have to raise the hands. Okay. Hema madam, whether you want to talk, whether Paravan Sivam, Saravanan, you want to talk? Who is that Zoom user? Sir, you rename. Otherwise, who you are, we are unable to identify, and to that extent, the attendance is going to be not recorded. So the Zoom user, please, you record.
Sir, how to download this PDF?
Hello?
Hello.
Yes.
Sir, where to download this PDF, sir?
Madam, what is asking?
Where to download the PDF? Actually, it's in a chat box. I'll be sharing.
It is in the chat box. Go to the chat box. Just download it.
It's not showing, sir.
Go to the chat box. Go back, because many messages have come there. So you go back. Okay. See, that is available.
Again, I'll.
That is available at 7:33.
Yes, sir. Yes, sir.
Again,
You can download.
Yeah, sir. Got it. Got it.
Okay.
Again down.
Session 1. Okay. Once
Yeah.
again you can.
Yeah.
Once again, madam has uploaded it. Now also you can download it. Just download it. Just it is showing the down arrow. Just click on it. You can
Yes,
save
sir.
it wherever you want
Yes,
on your
sir. Yes,
system.
Thank you so much. Thank you so much.
This may not happen in some handsets. That's what actually I sincerely appeal all of you to kindly enter with your desktop with the proper installation of Zoom app in it. Lalto Adhikari ji, you can talk. You unmute, sir. First you have to unmute.
Sir.
Now your voice is
Yes,
audible.
yes.
Yes,
Good morning. Good morning, madam. Good morning, sir.
Sir.
Madam, actually now I asking this what is the increase of the assets at equity? The answer is the fresh capital, but my answer is the part of revenue. Because usually I more revenue during the year, that equity means the equity capital plus reserve and surplus. After then the usually revenue increase, then automatically my during the year profit will be increased and reserve and surplus increase. As per the company side, the equity means the equity capitals and reserve and surplus. Then raising the revenue and the cash generations is a more, and after then we generate more assets like fixed assets. And by issuing the fresh capital, we can increase the asset. Either issue capital in case of the private limited company or public limited company from the shareholder.
So my one question, sir, if I
Hmm.
raise the capital, so do I use that whatever the money received, equity fund,
Hmm.
to my day-to-day operation, or I'll be using for investments?
Yes,
Like
ma'am.
investing, mainly I use for investing, right? So
Hmm.
investing in my any assets, capital expenditure. My question is, what increases both equity and asset? Whereas in revenue,
Assets.
yeah, revenue, your day-to-day operation. So that after your financial year end, your reserves will increase your equity, either increase or decrease. The question, both equity and asset.
Assets.
So in that, if the fresh capital comes into the business, my both equity also increases, asset also increases. Whereas in revenue, my net profit, only on my net
Hmm.
profit, my equity increases. Revenue is in P&L. After debiting all your expenditure, your
After
profit,
debiting all expenditure. Yes, ma'am.
yes, your profit. I have not given the profit. My options are fresh capital, debt paid off. If I pay the debt, that is my liability is decreasing. That does not affect my equity or asset. Revenue, revenue after my expenditure, net P&L. So your profit will go to your equity. None of the above. So my only option is fresh capital, which
Okay.
increases both.
Okay. Okay. Thank you.
Okay.
Okay.
So any other questions, sir? Yes, I'll share even Excel also.
Madam?
Oh, sorry. I am
Hello.
Manjunath ji, I have unmuted you.
Yeah, sir. Good morning, madam.
Good morning.
Relating to recent transaction, we are in the time of purchase around 10 years back from KDB from plats. The same two plats is one boundary, but two sales dates in the time of purchase. But now we need to company as raising one amalgamation of the two plats. Okay. And now KDB raised it around 20 to 30 lakhs amalgamation fees. This is capital expenditure or revenue expenditure?
So can you just repeat the question again, sir?
See, 10 years back we have purchased two flats.
Yes.
One is a KDB sites.
Okay, sir.
The two sites is one boundary only. Okay, na?
Okay.
But in the time of purchase, two sales did.
Okay.
Now company need to amalgamation two parts in one site. And we
Okay.
are but they are raising amalgamation fees around 20 to 30 lakhs.
Two sides.
Yes, amalgamation fees. That is capital expenditure or revenue expenditure? My question is.
First,
Now,
His
yes.
question is the land authorities, that what actually he want to say is that two plots are actually independent, registered independently. Now they want to make it as a single document. So
But it was
the expenditure of that conversion into a single plot, whether it is a capital expenditure or revenue, is question. I think. Is it right, sir? Manjunath, sir?
yes, sir, same.
Yes.
so. But first, it was in the name of the company only, no, sir?
Yes,
So
ma'am.
let me, madam, I will disturb you in the middle. Sorry.
Yes,
Manjunath
sir.
ji, whether
Yes,
you are keeping that as an asset there in your balance sheet only, no, as of today also.
Yes, sir.
So you have to incorporate all the expenditure to it first only.
In
Then
the
you
time
have
of
to treat
purchase
it
all.
because as long as it remains asset, it is an asset only.
Yes.
But because it is not put to use, for example, why I am here telling it is an immovable asset.
Yeah,
So
okay.
immovable asset goes as an asset nature only. For example, it is a movable asset. If you have a vehicle, so you are spending anything, that becomes an expenditure. But
Okay.
anything paid at the initial stage, including the insurance and registration, all these things will go to the cost of your asset at the time of purchasing the car. So that car and that land, so that is movable, immovable. This nature comes in. Is it right, madam?
Yes, sir.
So anything? I
No,
think.
correct.
Purely, it is like capital expenditure.
Yes, as long
Yes.
as it remains what it is, and whether it allows you to day-to-day expenditures in it, then you have to think of debiting it to your P&L trading or whatever it may be. That's what actually comes. Now, as long as that conversion fee and all other things, it will all go to that asset only. And when you are deciding what the asset you have to do, then only that is to be allocated. If that land is sold, automatically the capital value will be their expenditure. The realization will automatically get deducted in it.
Okay, sir. Okay.
Okay?
Okay, sir.
Okay, thank you.
Thank you, sir. Thank you.
Thank you. Sir, Paramasivam, sir.
Pooja
Raise
madam.
the hands. You can talk. Topiki, sir, you can talk.
Pooja madam.
Yes, sir.
You throughout the session in the study material, you didn't mention of any books to be maintained, like subsidiary books. Which kind of books to be maintained?
That all will
That
come later.
next,
Don't worry.
Next. Now we are in just passing a journal entry.
Just to, we are only
Okay.
taking the preliminary. We are in preliminary. Just we are 1 kilometer.
Okay, sir.
100
Okay.
kilometers.
Okay, sir. Okay, sir.
So next session will be on that, sir.
Okay.
Evening.
So that's what actually I request one and all not to miss any class. Okay. You all join. Today actually there is an attendance of hardly 230 I have seen. So actually you are totally near about you are almost 540 are there. Newly joined and old and everybody. Okay. So what about Paramasivam sir? Whether you want to talk, sir? Pawan Kumar, whether you want to talk? Panir Selvam, sir? You can ask. You unmute. Now you can. No audio, sir. You are not. Whether you have selected that audio mode in your system, that you have to please. CM Kalyana Shetty, sir. Kalyan Shetty, sir. Jaybalan, sir.
Good morning, madam.
Yes, please.
Good morning, sir.
Yeah. Can I attend evening class also?
Sir, every
Yeah,
class
it's a
is must.
continuous.
Morning, evening,
Yeah.
all classes are mandatory.
Both class. Okay. Thank you, sir.
Okay, Kalyan Sundaram, sir. Pannir Selvam, sir. You unmute. No, unmute. You are muted again. Sir, your audio connectivity is not there. Okay. Jai Balan sir is over. Okay. I think we have attended everyone. Okay. Madam.
Yes, sir.
We can, I think, anybody? So all these other things and other things that we will take up in coming time, because we are running out of short of this time also. It is already 7:45. Okay. You can, if not addressed, you please keep your curiosity and you kindly text again. Okay. Don't worry. Okay. Madam.
Yes, sir.
So thank you one and all. Thank you. So madam, shall we sum up now?
Yes, sir. Yes, sir.
Okay, thank you one and all. See you again evening 6 o'clock. Okay. With this, happy day, happy morning. Thank you.
Thank you, sir.
Thank you, madam. Thank you, madam.
Thanks.
We shall assemble in the evening, madam.
Yes. Good evening to all. So today we are like a small brief on first morning session. So initially we got to know what is accounting, the difference between accounting and accountancy. Accountancy is a larger branch which the accountancy has the branches of accounting, cost accounting, management accounting, HR accounting. Then the process of accounting. How first initially we will record, classify the items, summarize, analyze, interpret, and communicate to our end users. Who are the end users? So end users would be either our stakeholders, our creditors, bankers, or any other outside parties, managers, to take any important decisions. So next we had gone to the some basic accounting terms in accounting, such as capital, business transactions, liabilities, assets, fixed assets, expenses as such. Then next we have learned about the difference between capital and revenue item. So capital expenditure is of fixed asset, like expenditure incurred for the fixed assets, and if any expenditure which increases the efficiency or the life of the asset, then instead of revenue we will be classifying as a capital expenditure. Example, if like morning example, regular maintenance of building, so that will be as repair. So construction of additional floor which increases my rental income of 20,000, so that construction of additional floor of 20 lakhs, this 20 lakhs is my capital expenditure, which increasing my efficiency of earning the income. Then next, revenue expenditure, that is operational expenses. Then next, we have learned about the deferred revenue expenditure and income. Deferred means where we are deferring an expenditure and an income for more than one financial year is known as deferred revenue expenditure and income. Example, magazine subscription. If you come in the case of the person who has subscribed the magazine, it's an expenditure where it will be falling on 2 financial year. Other party who receives the money, then he's deferring his revenue to next financial year also. So in those examples, magazine or software leasing, like our Winman or Tally software, which every year will be renewing in the month of either in the month of April or September. Auto leasing, gym membership fees as such. So next, source of documents. So simply we can't blindly account. So whatever the data, what management tells, if the management tells, put the entry of sales of 2 crore, we can't blindly pass an entry. So there should be any supporting documents such as sale invoice or any purchase invoices to create an expenses, receipts, checks for bank transactions, bank statements, delivery notes, payroll records, expenses reports, or contracts or any agreements. So where a monthly expenditures will be allowed, such as rent, hire purchase agreements, etc. The next, theory base of accounting. What are the accounting concepts, like such as going concern concept, business entity concept, accrual system, double entry system, then accounting period concept. This was learned in the first session. Then next, we started with our double entry system. So what is double entry? So can anyone tell me the rule of double entry or text? Modern approach towards accounting. So I'm not seeing any
Put your
text.
text in the box, text box in the chart box, text your options.
Yeah,
in the...
modern also is fine. So morning, which we have learned simpler form. Today in what accounting, which we do approach party to expense. Yeah, debit and credit are 2 entries which we pass, but the rule for double entry system. Okay. No. Reflected in 2 ledgers. So I'll start. So first identification of item. So item is whether it is an capital or revenue item. Okay. So next, if it is an capital, capital which affects my liability and assets. So if it is a capital, then again a two branch, whether it's an liability or asset. So example, cash received rupees 20,000 towards the sale of goods, means my goods is going out of the business, means I'm decreasing my stock, and cash I'm receiving the stock. I'm receiving the cash, means my cash is increasing. So when the cash is increasing, I'm debiting. Debiting means cash account debited to stock in trade. So stock is going out of the business. So my entry will be cash account debit to stock in trade. So in simpler language, when asset is increasing, my cash is increasing, so I will debit. So if my asset is decreasing, I am crediting. So whereas stock in trade is my current asset. Both are current asset. One is increasing, one is decreasing. So similarly, in case of liabilities, example, if I've taken a loan worth rupees 10,000 in the month of April. So first, my entry will be I'm increasing my liability. So one side the cash is coming inside the business, one side I'm increasing the liability. Liability means when it increases, I'll debit. So cash is increasing. So cash account debit to bank loan. So 10K, 10,000, 10,000. Here my asset is increasing, so I am debiting as per the rules modern approach. Here my liability is increasing, so I am liable to repay in forthcoming days. So I am crediting. So that time here the rules is when your liability increases, you will credit. If liability decreases, I'm repaying my loan. When I repay my loan, bank loan account debit to cash or bank account, right? So cash is going out of the business. I'm reducing my burden. Okay. So that time I will debit my loan account. If it comes to my revenue account, if it is income, sales. So when I'm increasing my income, increments, I will credit. So we will be saying no credit to P&L. Okay, any interest received. So interest received on some investments. So that time we'll be crediting to our P&L. So example, if bad debts occurred, so I will reduce my trade receivables. That time I will decrease. That time I will debit. Either we will debit in P&L or minus sales return. Sales minus sales return. Okay. Whereas if it's an expenditure increases, debit. If it's decreasing, credit. Okay. On this rule, so any item, initial classification, whether it's a capital or revenue. Okay. If it is a capital, liability or asset, whether it's what creating any ownership, then it's an asset. Okay. Liability, where in future we are liable to pay to a certain party, whether it's a long term or short term. So when liability is increasing, we'll credit. With decreasing, we will debit. So can I get at least few entries? Every transaction has equal and opposite effect. It has two different accounts. Yes, but this rule, if you approach even so both equal, trial balance will tally, but there will be a trial balance open item. Instead of revenue, if I've taken in a capital, it will be lying in my balance sheet as an open item. Okay. So can we start with few journal entries now? This is a base to our journal entry. And if you pass a correct journal entry, your ledgers will automatically tally, match. So when your ledger balances, your trial balance can be prepared. After trial balance, your financial statements such as P&L and balance sheet. So in that, so initially, like for example, for one of the audit we had been where the books were maintained in manual, like government school audit where a huge ledger was there. So it was almost of one table, a big 2 books where they used to have one cash book. I guess in 90s and 2000 you would have seen where columnar cash books used to be. Now it's not there. Everything is systematic. Here, cash and SBI, Access, HSBC. Do anyone remember cash book? And one more cash book used to be maintained, that is petty cash. Then next, any other books? Then day book. Day book used to be debit, credit. This was the books which were used to be maintained previously. Now these has become everything systematic and can be maintained in our like soft copy, either in Excel, Tally, such all. So in these types, so unless your day book tallies and your cash book tallies, you are not able to prepare trial balance. After that, after day book, ledgers used to be maintained. Example, payroll ledger, or if you have any sales, purchase book, purchase return ledger, sales ledger. These books were maintained physically. So after day book, they used to write your ledger folio number and corresponding in these ledgers, journal folio number. So wherever the cross entries are passed in ledger, they used to get matched. After ledger, all the balances at the end of the financial year, trial balance used to be prepared. And every month on month, BRS used to be prepared by these cash book. Month on month, ledger used to be prepared. Ledger balance, then trial balance of these products, your debit and credit, P&L and balance sheet. Okay. So my first session is it visible? Yes. Double entry system is a fundamental accounting principle that forms the basis of recording financial transactions. Yes, one sir told that it is an equal and opposite. Yes, it's definitely equal and opposite, but it gets tallied. But your trial balance does not get tallied because your open items will be there. Instead of debiting my debtors, if I debit my creditors, my liability will get increased, and there will be a double effect. Okay, so characteristics of the double entry system: 2 accounts, recording of all the transactions, golden rule, and now modern approach, which is much simpler and easier, and complete accounting system, checking of accuracy. Okay, and advantages is modern and scientific, complete system of accounting, fewer errors. Instead of single entry, there would be few errors which can be easily identified. Fraud prevention. Because of double entry, any ledger misbalance also can be identified easily, and it is very easy to find for decision making. Okay, disadvantages is it is complex. So small business like such as provision store or some small small businesses, they can't afford. Okay, in that case, cash basis accounting would be better. Okay, and high cost. Yes, you need to appoint any employee to work on it if they don't have the knowledge of accounting. Not suitable for small businesses. Errors of principle, error of omission, and compensating. Instead of stock, have debited the cash. There is a compensating error. Since both are in current asset, it has been nullified. Okay. Next, modern approach, as I told, first classify the items, whether it's a balance sheet item or P&L item. That is capital or revenue. If it is a capital means balance sheet item. If it's a revenue item means it will be entered in profit and loss account. So first, expenses side, when my expenses is increasing, I'm debiting. Decreasing means purchase return, such as I'm crediting. So instead of crediting, what I do? Purchase minus purchase return I do. Example, purchases, wages, salary, depreciation, discount allowed. Okay. Then next, if in income side, sales, I'm crediting. If it's a sales return, I'm doing less. Either I can less or pass an entry. Okay. Decreasing, that is debit to the P&L. Sales, discounts received, bad debts recovered, commission received. Okay. So next, balance sheet item, that if liability increases, I'm crediting bank loan. Okay. Liability decreasing, repayment of loan or creditors, such as an asset increasing, debiting, such as purchase of furniture, fixture, computers, etc. Decreasing, cash is going out of the business, so I am crediting. Okay. And accounting equation is your capital and liabilities is equals to your assets. Okay. So in my T-shaped balance sheet, first my capital will be there, capital and reserves. Okay. Then next, my liabilities. So what are the liabilities which I'll have? Bank loan, overdraft, trade payable, outstanding expenses. Then next, taxes due, statutory dues. Okay, your assets. Okay, so assets, what would be my fixed assets, current assets, and my investment. So these all form my asset is equals to capital and liability. Okay, and next. So still here, any doubts? Yes, clear, madam. Okay. So next, so based on our principles, so we will pass journal entry. So your journal entry, journal entry. So journal entry book will be debit, credit. In Tally, we will be getting these type of entries. If you observe, then next, ledger folio, particulars. Same screen will be in our Tally also. So in journal entry, there will be a reference number to which ledger it is getting passed. Okay. So example, first, can we take any example? So example, if I introduce the fresh capital. So fresh capital means cash is coming inside the business. So my asset is increasing. Asset is increasing means I will debit. My asset is increasing and my equity is also increasing. So one, I'm debiting and my equity means liability, that is increasing, so I will credit. So cash account, debit, okay, 2 lakhs to my capital account, 2 lakhs. Okay. So in such way, we will be passing the journal entries. This journal entry, next, ledgers will be there. Tally, the ledgers will be there. Debit, credit. So when the capital is coming inside the business, okay. So this is my capital account and this is my cash account. Okay, cash is coming inside the business, so I'm debiting. So that will be my capital. Capital 2 lakhs. So here I'm giving. So anytime the business is liable to repay me the amount, so I'm crediting. Okay, that will be cash account 2 lakhs. So, okay, at the end of the year, these needs to get balanced, carry forward, and this will go to my trial balance. Okay, all the ledger balances forms our trial balance. So,
Madam,
yes, sir.
one question has come there. He explains surplus
Uh,
reserves, sir. So if possible, otherwise we can keep the Q&A in the end that you can say. Yeah, it is
Yeah,
at your discussion.
no, yeah. At the end, we can keep the Q&A because chat I'm not seeing
Please
much.
carry on.
Yes. Okay. So the major difference for journal and ledger is first journal book in which all the records, okay, transactions are recorded as and when they are arise is known as journal. So in a chronological order, the journal entries will be passed. Today we'll call day book. So any differences also in our tally, in our day book, we can check and track. Okay. Whereas ledger, the book which enables the transfer of all the transactions into a separate accounts known as ledger. Okay. Whereas here, my capital, so my revenue, so trade receivables, so whatever the amounts which I have received, example, trade payable if I'm paying to anyone, and my expenditures, payment. So balance amount will be carried. Okay. So what is it? It is a subsidiary book, which will be my reference, and this will be my principal book. Okay. So my ledger balance and month-on-month transaction data I'll get in this. Whereas this is a chronological order which form the basis to create my ledger. And journal is an original entry, book is a secondary entry. Okay, which is chronological record. This is an analytical record. Then next, sequential, that is chronological, account wise. So capital account and bank loans, number of loans. Then next, bank overdraft, such as all the ledgers will be matched and recorded, and debit and credit columns will be there, and this is sides, and narration must be there. And for ledgers there is no need of narration. Balancing, there is no need of balanced. Okay, and must be balanced. Then features of journal is the transactions are recorded in a sequence of their occurrence. Okay, as and when it occurs, the journal entry has been passed. It is an original entry in which transactions are written before any other further accounting treatments are done. Yes, and double entry of bookkeeping. The journal records both the aspects of transactions. The entire entries are recorded in such a manner it incorporates the complete transaction. Okay, so debit is equals to credit, either simpler way or complex. Okay, so complex, what I can say is, so simpler way is example, salary, outstanding account, sorry, 1 second. So in one example, what we can say, first provision of entry we make. So provision we are creating. So where we pass an entry, salary payable. Payable will be my liability. So my liability is my liability is increasing. So when my liability is increasing, I am crediting. So crediting. Okay. To salary, basic, my HRA, my ESI, PF. This will be my entry. So these four should match with my salary payable. Either 2 or what? Here, sorry, here it will be there. So this again, I'm creating a liability. My liability is increasing. for these ES and PF. Okay, next salary will be payable. So this is my complex entry. Simple entry, salary account, debit. This is which will pass in P&L to salary payable. That's it. Either you can pass in simpler form or complex form. So next, what are the utility of ledger? It's a quick and complete information of a particular item. So say if I'm taking the item such as rent. So how many months have paid the rent? Whether 3 months, 4 months, how many months rent has been provisioned and which still it's outstanding. So complete data will be provided in my ledger. And when the rent is paid. So these data will be provided in my ledger. Control over the transactions. Okay. So example, aging report. As I told, aging report. If I made a payment to my vendor. So vendor frequently. So there I can put a control. Why the particular vendor had paid within a time and that too within the period of expire of the credit period. So these type of controls can be put in ledger, aging report, preparation of trial balance, preparation of financial statement. Now clear? If journal entry and your ledger matches, trial balance is very easy to do. Okay, so few example. So first example entry, can I get the entry for my first example? Mohan started business with cash of 4 lakhs. So entry, debit cash, credit capital. Yes, sir. So your cash is coming inside the business. My asset is increasing. So my cash account, debit to my capital account. Okay, next, purchased furniture for rupees 30,000 in cash from Naresh. Okay, Naresh furniture house. So for second example, journal entry, furniture account debit to cash. Yes, since it's affecting asset side only, one asset is coming inside the business, asset is increasing, furniture and fixture, asset is going outside the business, cash is decreasing, cash account. So furniture account debit to my cash account. Okay. Purchased goods for cash from Kamal, 20,000. From Kamal, goods for 20,000. Entry, purchase account debit to cash. Yes. Yes, sir. Correct, sir. Purchase account debit to cash. Goods purchased from Suman on credit basis, 40,000. Entry, goods purchased. Purchase account debit to Suman. So now Suman is my trade payable. He is my vendor. Okay. And he'll be, I have created a liability and my liability is increasing and it will affect my P&L and balance sheet here. P&L where I'm debiting is my purchase account. Whereas my balance sheet item is my vendor account. Okay. Next, machinery purchased via cash of rupees 21,000. Machinery account debit to cash. Yes, fixed asset account debit to current asset. That is correct, sir. Correct. Sold goods for RAM on cash basis 12,000. RAM account. Someone RAM account wrong. Okay, RAM account debit to sales account. Yes. On cash basis, cash account debit, yes. So there is either you can pass a single entry, that is cash account debit to RAM account. Sorry, this is a double entry. Okay, first you are creating a sales. So sale account, okay, to RAM account. RAM account debit to sales. Then I'm receiving the cash. So cash account debit to RAM account, or one more is cash account debit to sales account. You can pass. Goods sold to Mr. Sundar on credit basis. On credit basis, 15,000 sold. Yes, Sundar account debit to sales account. No, creditor, yeah, Sundar account debit to sales account. Okay. Yes, Sundar account debit to sales account. Cash paid to Suman, creditor 40,000, where the first entry which we have passed, goods purchased. So one ledger has already created of 40,000. So now I'm paying to him. So what is the entry? Cash paid to Suman. Cash is going outside the business. My liability, I'm reducing my liability. So liability debit. So Suman account debit to cash account. So next, paid wages. Paid wages, rupees 18,000. So simple P&L item. Yes. Then cash received from Sundar. So where we have done the credit sales. The seventh point, we are receiving from him. So it will be of 15,000. So entry is cash. Sundar account debit cash. No, sir. Cash is coming inside the business.
ಎರಡಕ್ಕೂ ಅಲ್ಲಿ
Yes.
ಮಾಡಿಸಿ ಮಾಡುವಾಗ ಹೇಳ್ಬಿಟ್ಟು 2 ಸೆಟ್ ಅವ್ರಿಗೊಂದು ಇದೊಂದು ಹಾಕಿ ಆಮೇಲೆ ಒಂದು ಫೋಟೋ ಸೆಟ್ ಅನ್ನ ಇದ್ರಲ್ಲಿ ಹಾಕಿ ಮಾಡ್ಬೇಡ ಇದರಲ್ಲಿ ಅಫಿಷಿಯಲ್ ಅಂತ ತಗೊಂಡು.
Cash is coming inside the business.
ಎಸ್
Done.
ನಮ್ಮ ಇದರಿಂದ ಒಂದು ತಗೋ. ಯು ಕ್ಯಾನ್ ಗಿವ್ ಯುವರ್ಸ್ ಆಲ್ಸೋ. ನಮ್ಮಲ್ಲಿ ಒಂದು ಅಫಿಷಿಯಲ್ ಇರ್ತದೆ.
So next. So few special transactions. Actually, this is normal transaction. Like what is this? What's up? Yeah. Yeah. Drawing of goods.
This is
So-
we will send it to notary.
Yes.
We will get it, sir. Okay. ಅಲ್ಲೇ ಒಂದು
Sir,
ಇದು ಇವ್ರದ್ದು ಆಗಿದ್ಯಾ? ಇದನ್ನೊಂದನ್ನ ಹಾಕಿ ಅಲ್ಲಿಗೆ ಆಮೇಲೆ ಕಳ್ಸೋಣ. ಇದು ಅವ್ರದ್ದು ಫೋಟೋ ಆಗಿಲ್ಲ ಇವ್ರದ್ದು.
So Sridhar sir, audio is on, sir.
ಅವ್ರು ಪ್ರಸಾದ್ ಸರ್ ಎಲ್ಲಿದ್ದಾರೆ?
ಹಾ.
ಒಂಚೂರು ನೀನು
One
ಅವ್ರ ಜೊತೆ
second.
ಕೋಆರ್ಡಿನೇಟ್ ಮಾಡಿದ್ರೆ ಅವು ಅವ್ರದ್ದು ನೋಟ್ರೈಸ್ ಎಷ್ಟು ಮಾಡ್ಕೊಂಡ್ಬಿಟ್ರೆ
Well, yes. Yes. Yeah. Few special transactions, drawing of the goods. See, in many businesses, we have the 10 amount is that we will do the cash withdrawal. But instead of cash, I'm taking the goods, okay? Such as in any wholesale retail shop, merchant, pulses and grains. Pulses and grains, even they do the sale of them for their household personal use. They draw to their what they do, they take to their home. In that case, drawing account we will be treating as same as withdrawal of cash. So purchase account we will be debiting, crediting to our purchase account. While we on cost base, not on selling price. Okay, on cost price we will be debiting. Okay, and one more, goods donated. Okay, so some donation for some temple puja if they have come. Okay, so in that time I'll be giving them 25 kgs of rice as donation. Okay, so in that case donation account is my P&L account. Purchase also it's in my P&L. So same on cost price basis, I'm creating an entry that is donation account. I'm debiting, crediting my purchase. So my stock is going out of the business as in the form of donation. Okay, and goods distributed as free sample in order to acquire the market. Okay, as nowadays we'll get the what shops like buy one get one. So if you're buying one shampoo, you can buy like you'll get a free of another shampoo also. Okay, so this free sample you can take as advertisement cost. Okay, or with one shampoo I'm giving the conditioner. Okay, conditioner will be as free sample, whereas if I'm giving one shampoo with another plus one shampoo free, then on weighted average will be providing the price. Okay, in this case free samples I'm distributing. Okay, in that case the advertisement expenses debit, expenses are increasing to purchase account. Okay, goods used in furnishing the office. Okay, if I'm the person who makes the furnitures, okay, so for my office purpose I have made for my own purpose furniture. In that case whatever the materials or wages paid, will be created as cost on cost basis. Will be creating an asset. Then next, loss of goods by theft or fire. When goods are lost due to theft, due to theft or fire. Okay. So that time we'll create a ledger, whatever the losses has been damage created to the business, loss by fire or theft account debit to purchase account, my stock lost. Okay. If goods are insured, so every year insurance premium you would be paying. Okay. So for that certain sum of money, the insurance company will guarantee us to pay us. That time, insurance company account we will create ledger and will debit to that account. Insurance company account debit, whatever the losses, first entry I've made, I'm nullifying the entry. Okay, and balance which is not paid by insurance company will be debited to my P&L. That is, all the losses will be debited to my P&L. Okay. Now, since here the open book item is there, which insurance company account? So loss by theft and loss by one debit and one credit, it has got nullified. So insurance company account has been still open. So as and when the claim is received, bank account receiving the cash. Okay. So bank account debit to insurance company account. Okay. So next, when insurance company does not admit any claim, that time whatever the theft, the ledger which we have created here, loss of fire to purchase account, directly we will transfer to our P&L account. Okay. So the question to pass the JV. The first point, goods worth rupees 50,000 were destroyed by the fire. Insurance company admitted a claim for 70% only and paid the same. Can please try the journal entry for that? What about? Yes. So entries, first entry. No. Loss account debit to purchase account. Okay. Insurance company 35,000. Yes. Okay. So first, so the goods worth rupees 50,000 were destroyed. Okay. By fire. The insurance company admitted a claim of 70,000 or 70%. So first, whatever the loss has been incurred, I'll pass an entry. So I'm creating an expense. Okay. So loss by fire. The ledger is opened, debit, whatever, whether your stock, furniture, etc. So we'll be crediting, okay, of 50,000 to purchase or your stock in trade 50,000. This is my first entry, okay, which was destroyed by fire. Next, insurance company admitted the claim of 70%. Okay, the insurance person told, no, I will pay only the 70%, not full of 100%. So 70% I'm creating like as a trade receivables from them. So insurance company account debit, 70% is my 35,000 to loss by fire. 35,000. Is it clear? Okay. So balance amount, what to do? 15,000 is there. So 15,000 is balance. So total this ledger should be closed. So balance whatever is there, that is that we assume as our loss that we debit to our P&L, debit 15,000 to loss by fire. Loss by fire, that is 15,000. Okay. Now the insurance person is giving me the amount. So cash is coming inside the business cash account debit to insurance company. 35K, 35K. Now the ledgers has been matched. Clear with this concept? P&L debit 15K. Yes, sir. Bank account debit to insurance. Yes. Yes. Yeah. Next. Goods costing rupees 15,000. Sale value 20,000 were distributed as free sample. Entry. Point number 2 entry. Goods costing 15,000 were distributed as free sample. Advertisement expenses, account debit to purchase. Yes. Yes, sir. Yes. Advertisement expense. So we will be taking on cost basis, not on sale value. Since we are not realizing, it is like self-consumption. Okay, for self-consumption. So increasing the market capacity. So we are giving as a free distribution. Goods costing rupees 40,000, sale values 45,000 were taken by the proprietor for personal use. So JV, journal entry, drawing account debit. Yeah, how much? 40 or 45,000? 45,000 is wrong, sir. Drawings. No. I'm not treating myself as my customer, right? So why I will pay additional 5,000 to the business, my own business. So I'll be paying 40,000 only, right? It's treated as for my own business. So I'll be paying only 40, not 45. Okay. So it will be as drawings account, debit to stock account or purchase account. 40,000, not 45,000. This will be tricky and they may ask in MCQs, multiple choice questions. So they'll try to confuse you whether costing, whether cost price or selling price. Even in insurance also. So insurance, they will give goods worth rupees 50,000, but sale value was 70,000. Don't get tempted with 70,000 and do the portion for 70,000. Then the whole answer will be wrong. Okay. So small MCQs. Can we start? The first question. The ledger is called, what is ledger called? Final entry, secondary entry. Option D. Original entry. No. It's not original entry, sir. Original entry is my journal entry. See, first is my journal entry. Second is my ledger. So ledger, I will do reconciliation. So again, reconciliation, I will be passing a journal entry. Okay. So ledger will be forming the basis to prepare trial balance. In trial balance, no entries I can pass. It's not editable in my trial balance. You can check in the tally also that trial balance is not editable. Even financials, balance sheet and P&L is not editable. Only you can pass a journal entry in any software. Okay. Option D. Option D. None of the above. No. So first difference. My journal entry is my original account. Original entry. First basic entry which I pass. Journal. The next is secondary entry is my ledger where I do reco. Okay. Again next I do for balancing, I'll come here. Original entry only I'll be passing. Okay. So ledger is my secondary entry. Okay. Journal is my first original entry. Where is my question? Yes, it's my ledger is my final entry. Primary entry and original entry is for my journal. Okay. None of the above. Again, wrong. Second question. From which of the following is a ledger account is prepared? From which of the following ledger account is prepared? Transaction, journal, event, none of the above. Yes. B, option B. Yes, sir. Option A, transactions. Yes. No. See, transaction example, I have paid without knowing to an accountant for Mr. X rupees 10,000. This is called transaction. Okay. So this transaction, I pass an entry after seeing in the bank statement, journal entry. This journal entry will be passed and ledger is created. Either ledger is created and there in particular ledger it goes and sits. Okay. From which of the following? From the journal ledger, transaction, then the transactions will be classified and passed. Pass the entry, then the ledger. Okay. Option B is the answer. Then next, question number 3. An account is having debit balance is established when? Debit balance. Okay. Debit balance means might be in my asset side or my P&L debit sides. Okay. Ledgers of P&L debit side. The last entry of the accounting period was posted on debit side. Option B, the amount of debit exceeds the amount of credits. There are more entries on the debit side than on the credit side. Option D, none of the above. Option B, option C. B. Option B. Again, option A. Wrong. Option A. My question is, I'm not asking whether it's a previous year. At any point of time, my ledger is debit balance. Debit balance. Debit balance, which of the ledgers will be there? Cash account. If it's overdrawn, if your bank account is overdrawn, means it will be showing credit balance. If a bank account is positive, means will be showing a debit balance. Okay. So last entry of the accounting period was posted on debit balance side. No. Even in this accounting period also, I can create a new ledger. This is not suitable to this question. Okay. So next, the amount of debit exceeds the amount of credits. Okay. Example, have done the business. Okay. So Mr. A is my trade receivable. Okay. I have sold the goods worth rupees 1 lakh. Okay. But he had made the payment of 10K, 20K, 30K. Okay. So, sorry, I've just 1 second. I've done a wrong entry. Yeah. So Mr. A made a business of 1 lakh. Okay. But he's making the payments of 10K, 20K, 30K as such. Okay. As and when still balance carry forward. Still how much I'm receivable? Liable to receivable 40K. Anytime it will be showing me in my journal, ledgers, debit balance. Okay. Okay. Even though there is number of entries also, it doesn't matter. Okay. So the amount of debit exceeds the amount of credits. Okay. My debit is 1 lakh, but my credit is 60,000 I have received. So balance 40 is receivable. So debit side. Okay. The next option, there are more entries. So like this entry in debit side. So 1 lakh instead of year, I have say made sale of 10K, 20K, 40K, but only one entry. Bank transaction 30K. There are more entries of debit side than on credit side. Than on credit. Your 3 entries are there, your 1 entry. So this is on the number of entries, we are not seeing the debit balance. So the best option is option number B. The amount of debit exceeds the amount of credit. Okay, clear? So the next question, which of the following item will be appearing on the credit side? Which of the following item will be appearing in credit side? Done. Option A. So option A. So I guess now it's clear which of the following item will be appearing on credit side of the ledger account. Yes, discount received, cash received means it will be on my debit side. Current asset, cash is increasing, cash is coming inside the business. Rent expenses, revenue item, and revenue item expenditure is increasing, so expenses will be debited. Okay, next purchases, P&L, that is revenue item, again expenses, debit. Balances, discount received. Okay, discount received, it's like your liability, your burden has been decreased, so credit. Yes, option A. Fifth question. Among these, which item is used as the base for preparing trial balance? Among this, three 44 participants, but only the 60 to 70 students only are answering. Option D. Why can't be option C? Any idea why option C? Preparing trial balance. Which item is used as the base for preparing trial balance? Option C. No idea. It's my original entry. First you pass journal entry. Journal entry will give the effect to respective ledgers, and those balances. On the balances, we create a trial balance. Okay. So option is option D. A small concept which already we have learned. Okay. Subsidiary books. Subsidiary books. Which are the books to be maintained? So these are all like cash book, single column, double column, triple column. As I showed previously, initially we used to have this type of ledgers, big ledgers, almost what you say, more than a king size, I guess. It was very big ledgers. It used to be covered a full table. Okay, their cash, SBI, like number of banks, number of columns used to be there, whether it's a single, double, triple. Okay, and one petty cash book used to be there. Whatever the entries we used to pass. Okay, and month on month, BRS used to be done. But now everything in our software we can be kept. Okay. Next, petty cash book, then subsidiary books, purchase book, and material inward and outward books will be maintained at the inward areas. Sale books, stock book. So stock inward and stock outward, purchase outward, return outward. Okay, purchase returns also will be kept. Bills receivable book. So bills receivable, another in Excel, if we are maintaining a software Tally, there you get the aging report. So number of days delay in receiving the payment. As such, so bills receivable books are maintained and bills payable book journal proper. So any entries which are which don't fit in these above, so in journal proper the entries used to be created. So till here, any doubt? Yeah, fixed asset register we maintain now. Fixed asset register and contracts and agreements. Okay. Other than these registers, we maintain. So vendors invoice, usually purchase inward. So practical while we go to audit. So initially, what all we will check our cash book with monthly BRS. What are the effects? Okay, if you're maintaining the check system, like providing PDC checks, so these details we will check. Okay, cash, I mean bank BRS. Okay, then next BRS and your computations and calculations and differences between your sales and whatever the returns filed with various departments, that we'll be discussing separately. Okay, then next stock in trade, and if it's gone for job work concept, where the item is in transit, where the stock the raw materials will be given to the job worker. Okay, so his ledger will be maintained with stock, including the stock. Then next, bill receivables. So bills either you will maintain sorry, not bills, yeah, bills receivables will be maintaining in aging reports. All this can be maintained in system, whereas bills payable, invoices, either can be the client can maintain ledger wise, that is party wise, or as and when received on serial number. You should stamp the entries. Okay, so in that way the entries and days, okay, when in one file only you'll get all the vendors bills, can be easily tracked. Okay, and fixed asset register, yeah, can be maintained in Excel or separate software or normal typical ledgers. So clear? Yeah, bill discounting register also we will maintain. But nowadays, bill discounting is not done much frequently, I guess. Okay. Tax ledger, either the soft copy we will be maintaining. Why there is required of hard copy? System. Soft copies. Yes. Clear? So can we have a small 10 minutes break? So we can start with our bank reconciliation. Yes. So 10 minutes we will have a short break. So we will be resuming by 7. What you say? 7:15. We'll be resuming by 7:15. Okay, students, can we start?
I think you can, madam. Definitely, I think.
Yeah.
Please.
Yes. So next, we have passed the journal entry and ledgers are matching now. So sometimes you will get to know there, like suddenly if you see the bank statement and your cash book. So your cash book means, So I'll say your company's accounts ledger statement. That is your bank account. Okay. Don't get confused with literal cash book. Okay. Cash book means bank ledger as per the company's account. Okay. So your bank book and your bank statement usually get mismatched. Okay. So what would be the reasons for the mismatch? What are the reasons? Please type in the chat box. The reasons for the mismatch in our bank statement. Uncleared payment. Yes, sir. Uncleared payment where we have issued the check, but it has been cleared after 2 days. Means on 29th, 28th Feb, I have issued the check, but it has cleared on 3rd March. Okay, so for next month. So I'll be reconciling on the 29th Feb. So still it's an outstanding. Yes. Difference in time. Okay. Late check collection. Okay. Clearing dates. Okay. But only on one point you're giving. Any other examples? Post-dated checks. PDC checks. Yes. Checks not cleared. Same. More. Why the BRS is required to be done month-on-month basis? Check issued but not debited in account. Okay. If I'm a vendor, so you have given me the check. Okay. But after 1 month, I'm producing to my bank. So I forgot. So to that account, I should be maintaining the fund. Okay. But still it will be outstanding. Okay. In BRS, it should be reflecting. Okay. Check issued but not presented, deposited, not cleared, uncleared check. Wrong entry by bank. Oh, yes. Wrong entry. Yeah. For me, in my credit card, so unnecessarily when I've swiped in petrol bunks, so they have charged me surcharge. So when I inquired, taking the card, they told there won't be any surcharge applied on your swiping of your credit card in any petrol bunks. When we inquired, then they reversed wrong entry by bank. Yes, that example. Check issued but not deposited. Clerical mistake. Okay, yeah, clerical mistake. Okay. Banks charge not booked in our book. Bank charges. Yes, bank charges. Unless we get bank statement, we can't. Timing difference. Okay. Post-dated checks. Checks issued, not realized. So, okay. So, what is the time to get realized? So, what is the validity for one check? Time period. Fraud entries. Okay. 3 months, 24 hours. Then for 24 hours means if I give the party today, by tomorrow he need to get cleared. No? 3 months. Yes, 6 months. Within 6 months, you need to deposit the check. So one more thing. Check will be basis to sue any person also. If you have deposited 3 times, 3 to 4 times, still it has been dishonored due to insufficient balance, or if the person has stated that not to honor the check, in that case you can file a case on the opposite person. Okay. So up to 3 months, sorry, up to 6 months it is valid. Hence it's a stale check. So next 3 months, no electronic transactions, whether BRS still required? Yes, BRS still required. BRS still required, and it will be for form of your while auditing will be checking even the BRS also, whether it's day-to-day entries are passed also, the clear BRS should be given. Okay. Bank reconciliation statement. Okay. So while you prepare BRS, detection of errors. So when I've given instead of 200, I've passed the pay I've paid only 200, but while passing an entry, I have showed us 2000. So I'm getting an excess of cash. 1,800. So here detection of error, undue delay in realization, checks, reduction in fraud. Fraud can be checked. Okay. Updated records, month on month it should be checked and updated records will get. So reasons for the difference, as everyone told, check deposited but not cleared. Check deposited but not cleared. Check issued but not presented for the payment. Okay. I know that you are like you are in very good faith. So you will have the balance. So I thought after coming from the trip, after 1 month, I'll be depositing the check. So not presented, but still in my BRS, it will be lying. So interest allowed by the bank and interest charged, bank charges. Okay, we can't do the provision entry. Okay, this time on 4% basis, they have charged the interest. Okay, on bank statement, actual basis will be passing an entry. Direct collection by the bank. Yes, direct payment by the bank. Okay, collection and payment and direct deposits by the debtors. So bill discounting, here the picture of bill discounting also comes. So when you are required the amount, you have done your bill discounting with the bank. Okay, if the other person has dishonored your bill, so again the bank collect from your bank, if collect from your bank account directly if you have the balance. Okay, dishonor of bill discount with the bank. Okay, error by the bank, like surcharge, unwantedly they have charged in my bank account. When I raise the query, then it has been reversed. Error in my cash book. Okay, so person asked, is it necessary to maintain BRS? Yes, it is necessary. So in MNCs, so you will be maintaining. I'll just show it. Usually MNCs will have two accounts. Okay. Two accounts, one INR account they'll be maintaining when any amount received on their export within certain period, they need to get cleared. Okay. Clear. Okay. So you have received the fund is there, you will receive a mail to authorized person in accounts team. So he need to submit all the copies like FIC copy, invoice, or like invoice, shipping bill, okay, shipping bill and other supporting documents. So on 28th Feb, he has received received the amount. It's standing in a suspense account that it has intimated to the company that clear this amount. Okay. So 29th Feb, the person is not available. So in that time, so the documents to be submitted. So 3 to 4 days takes place, but you have the fund. So it gets realized in 3rd March. Okay. Even though we don't pass the entry, so bank charges will be there. So the clearing charges, the bank people can put on 29th Feb also or 3rd March. Okay. Or if once the intimation is received, the person has already passed the entry in the books of accounts, books of accounts, but it's not credited to our bank account. In that case also, BRS is required. So where you have a foreign inflow and outflow, okay, in that case, especially in MNCs, they give more prominence for BRS to be maintained, and within 10th of every month, the accounts should be clear. Any entries to be passed, and then the previous month account will be freezed and they will not be able to pass any sort of entries. Okay, so any errors, so any like double entry or any entry like ledger, like instead of payables are passed in receivables, in this ledger we will get to know and it should be rectified. Okay, so okay. So the base either we need to take while creating BRS, either cash book or bank statement as a base. So if I'm taking my cash book, that is my bank passbook, sorry, bank statement, what you say. If I'm taking my cash book as a bill, what base, okay, that is my favorable balance. Favorable means debit balance, okay. So add minus. So then you should get as, then the balance should be balance as per bank statement. Bank statement. Okay, that is bank book. Okay. So first, so bank in my account, the first question, the first is I have received the collection, online collection I have received. So I'll be debiting direct collection. Direct collection, since it's on my bank, my ledger, in my books of accounts, I've not passed, but it's reflecting in my bank statement. So I'll be adding. Okay. So second one, so like I have a standing instruction to pay the rent on 5th of every month. 5th of every month, I'm paying the rent of 10,000 to this person rent. So I've not passed the entry. In that case, rent, that is standing instruction. Instruction, direct entry, direct payment, I'll be deducting. Pass the entry and deduct. Okay. So next, okay, I have an outdated, like have made the payment. The check has been given, but still it has not like it has not been clear. So as per my bank book, already the entry is passed. Okay. So but I need the balance as per my bank statement. I'll be adding back. Check issued, but not realized. So I'll be adding, since the person has not been deposited to the bank for realization. Okay. So next, dishonor of dishonor of bill discount. So you have discounted the bill and you have already received the amount, you have used the amount. Now the person who needs to pay you has dishonored your bill. So in that case, bank will directly collect from your bank account. So that in that case, what can I do? So I've already received. Now I should do minus, since it's already showing in my bank statement. Okay. Bill dishonored. Okay. Okay. Then favorable balance, add, and minus, the final is your balance as per your bank statement. Okay. So if you go reverse, in questions they may give balance as per the bank statement. That is your passbook. Okay. In such case, whatever you have done subtraction, you will be adding. So my bank statement, bill discount, direct collection, direct payment the bank has received. Okay. Now the entry is not passed in my accounts, books of accounts. So I'll be adding back the amount. Okay. Rent, standing interest instruction is there. But in my books, the entry is not passed. I'll be adding. Okay. So whatever, so one route, if you keep the balance as per the cash book, so the opposite is my, if the balance is given as per the bank passbook. Okay, clear with this concept? Okay, clear. So what would be the advantage of maintaining BRS? Now, after this, what would be the advantage? So in small companies, easily we can identify. But when it comes in crores, when in MNCs, how can we identify? So month on month, it should be, errors can be detected. Yeah, errors should be detected and rectified and clear. Yes. To get actual balance. Yes. Real-time balance, yes. Take decision in time, yes. The frauds can be immediately found out. Because after 6 months, if I go and ask about the surcharge to the bank, no one will respond. If the immediate charges have done, so that time when we ask, immediate response will be there. Or n number of questions and procedures you need to be followed. Next, error rectification. Yes, yes. Accuracy workload will reduce month on month. Yes. Yeah, missing in payments also can be tracked. So one question. Cover, okay. This is a question, okay. In exam, you may get in even in a descriptive question, descriptive or in MCQ. So can you just start the question? It's in fund management, yes. Fund management, it won't help. Cash flow will help in fund management. Bank reconciliation statement helps in finding the detections, errors, frauds. Okay. Daily balance maintained. Yes. So this question, just 5 minutes question. This is. So I need the final balance. That's it. So I've given the balance as per the showing the bank statement showing a favorable balance. Okay. Of 28,000. Please start. Okay. It's preparing of bank reconciliation statement. 7 points are there. I'll read out. Mr. Rohit received a bank statement showing a favorable balance of 28,000 for a period of 30th June 2023. This did not agree with the balance. Okay, he did not agree with the balance in the cash book. Okay, suddenly he got a shock because in his ledger he'll have some X amount, but the bank statement is showing 28,000. So, okay, after examining the books of accounts, okay, cash book and a bank statement disclose the following errors. Okay, first, a debit of 500 rupees appeared in the bank statement for an unpaid check, which has been returned marked outdated. The check had been redated by the customer and paid into the bank again on 5th July. So, an outdated check you have received, but again you had given the new check. Okay. Next. Second is 2,000 rupees paid into the bank had been entered twice in a cash book. Okay. So instead of 2001 entry have passed 2 entries. Okay. Third one is on 20th June, a customer of a company directly deposited the amount into the bank, 7,000, but no entry had been made into the cash book. Okay. On 30th March 2023, a company had entered into a hire purchase agreement. Okay, as standing instructions, as I told, rent standing instructions to pay a banker's order a sum of 4,000 on 10th of every month. Okay, commencing from the April. No entries had been made in the cash book. Okay, a customer of a firm who received a cash discount of 4% on his account of 5,000 paid the firm a check on 12th June. The cashier erroneously entered the gross amount in the bank column. Gross. Instead of net amount, he has entered the gross. So excess amount has been entered. Bank charges amounting to ₹1,000 had not been entered in the cash book. A deposit of 6,000 paid on 29th June 2023 had not been credited by the bank till 1st July. So as of 30th June, I need. Okay. BRS was more important when we didn't have net banking facilities. When the bank statement we used to get on monthly basis. So those times we used to stand in a queue. Okay, in bank we used to stand in a queue, take printouts of bank statement and used to come. So that time BRS was very useful because on whatever the check we have given or paid, any transaction on real actual transactions we used to do. But when the bank statement we used to receive, we used to know the status of each payments. Okay. That time BRS was very useful. Now online and net banking and even the message you will get once the amount has been cleared. Okay. So what is the answer for this question? 31 is wrong. I need full total answer. Prepare the BRS. It may be even for 1 mark multiple choice question also, or descriptive where for 5 to 10 marks in the exam. And everything will be on Excel mode. Wrong. I have given as per the bank statement. Amount as per the bank statement. Wrong answer. $28,000 wrong. Wrong. No. 33 is wrong. 23,500 is wrong. 27,500 wrong. Think calmly. 1% correct answer. At least 7,000 is wrong. It is more than 35,000. Okay. Not 30,000 also. I'm giving the bracket more than 35,000. Now tell me. 345 students. Answer. One answer. More than 35,000. Oh, 35,000, 45. 45 only won't come. 1,50,000. No, no, no. That more than 35. Correct answer, please. Because unless your books of accounts are correct, the next part we can't. Someone is near to the answer. 42,500? No, but we are near to the answer. 46 is wrong. 36,700 is wrong. 44 wrong. 52 wrong. 44 wrong. 39,500 wrong. No one? 47 wrong. So, Barinathan sir, you're near to the answer. But slight, I guess one point you have missed regarding the discount. Just kindly read point number 5. A customer of a firm who received a cash discount of 4% on his account of 5,000 paid the firm a check, a check on the 12th June. The cashier erroneously entered in a gross amount. Okay. See, instead of he had paid a net amount. Okay. So he has paid. So he has paid net amount. Okay. But he has paid 4,800, but he has passed the entry as 5,000. Wrong, wrong. Pratik Doshi. 42,700 is a correct answer. And Jagdishwaran Salem is correct answer. So 42,700. 2 people have given a correct answer. Yes. Mohan sir, it's correct. Selva Kumar sir, it's correct. Yes, now everyone are getting 42,700. Yes. So we will start solving. So first, it is as per my bank statement. Bank statement 28,000. I'm writing here only. So first is my first question. A debit of 500 appeared in my bank statement for an unpaid check. My bank statement for an unpaid check which has been returned, marked as outdated. The check had been redated by the customer and paid into the bank again on 5th July. But I am preparing the books of accounts as of 30th June. Okay. As per my bank statement, 28,000. But in my cash book, already the check has been lying as outdated. The check has been issued. So I have redated and issued. Okay. But it will be showing. So as per my cash book, already it has been reduced. So I will add back to get my bank as per what bank bank balance as per my books of accounts. I'll add back 500. Okay, next, rupees 2,000 paid into the bank had been entered twice. So in my cash book, I have entered twice. Means I have reduced 2 times. So there is a difference of 2,000. So I will be adding back. Okay. My third question. On 20th June, a customer of company directly deposited the amount. My customer has directly deposited, but my bank, bank balance as per my company's account, it's not showing. But there is no entry. Okay, so I'll be subtracting because I need to know the bank balance as per my books of accounts. Okay, next on 30th March, the company had entered into an hire purchase agreement to pay the banker the order of 4,000 on 10th of every month, okay, commencing from the April. No entry had been made in my cash book, okay. So already in my bank statement, so every month 4,000 it has been reduced. But in my bank statement, I have not passed single entry. So my bank account has been reduced by 12,000. For 3 months, it has been reduced by 12,000. So I need to get the balance as per my bank book, books of accounts. So I'll add back 12,000. Okay. Next, a customer of a firm who received a cash discount of 4%, that is 5,000, 4% is 200 on his account of 5,000, paid the firm the check on 12th June. The cashier erroneously entered the gross amount. Okay. See, I have received 4,800. But instead of 4,800, I have passed the entry as 5,000. Means 200 rupees I am showing excess. Okay. That of a customer of a firm who received the cash discount of 4% on his account of rupees 5,000 paid the firm a check on 12th June. The cashier erroneously entered as a gross amount in the bank column of the cashier. Okay. So I'll be add back the 200. Okay. The next, the bank charges amounting 1,000. So it's reflecting in my bank statement. So I'm back in the 1,000 rupees. Next, the deposit of 6,000 paid on 29 June had not been credited by the bank until 1st July. So I'll add back. So you'll subtract 7,000. Rest you'll add back, and the balance is 42,700. Any doubt? Is it clear? Yes. Clear? Clear with this? Now it's clear, clear. Yes, sir. See, only 2 types. Either they give balance as per your cash book, that is as per your books of accounts, or balance as per the bank statement. So just keep one concept in your mind. If as per your cash book, whatever the entries are there, reverse. That's a small trick which I use. So if this particular sum, if they would have given me, say my balance was 42,700. Okay. So I'll do 42,700. I need to know the balance as per my bank statement. So first, I've given a new check. So in my books of accounts, the entry has been passed. Okay, but in my bank statement, it's not there. So I will subtract, right? Still it will be showing. So second, 2,000 has been done twice in my book. Means the error is in my books of account. Okay, I'll be, so in that time I'll subtract. Already I have done 2 times the payment expenditure. My cash has been reduced. So I will do add back. Okay. Similarly, so whatever the plus you have done, you will be doing minus. The answer you will get 28,000. That's it. Can you explain point 2? Okay. So 2,000 paid into the bank had been entered twice in the cash paid. I have made the payment entry. Okay. Cash has been gone out of the business. Okay. So that I have done 2 times. So instead of 2,000, example, Mr. R account debit to Mr. A account, sorry, Mr. R account debit to cash account 2,000. Twice I have passed. Okay. So in bank it's already reduced. No, not that. One second. No, sorry, 2,000 paid into the bank. Okay, direct collection has been done by the bank, but I have done 2 times. 2 times the entry has been passed, so I'm reducing from my balance. Means I've increased my cash balance. Okay, that I'm reducing. Next, double entry made. Okay, yes, clear. Yes. So next question. The answer is here. So I'll be sharing this PDF also. So next question. One MCQ question. Answer for MCQ question. NSF marked in check sent back to the bank. Sent back by the bank. Means, what is the meaning of NSF? 50 questions. Yes. Option C. Not sufficient fund. Yes, correct. Option C is the right answer. Option C is the right answer. Next. Question number 2. Question number 2. In cash book, bank charges 5,000 was not recorded. Name the correct cash book adjustment. So cash book, the bank charges has not been recorded. So what I will do? I'll pass an entry. Okay. So what would be the adjustment? Option A, it will be credited in bank in cash book. Option B, it will be debited in cash book. No adjustment needed in the cash book. Option D, charges will be added to the cash book balance. So, what's the answer? C, no adjustment needed. No, sir. Sir, adjustment should be needed. Bank charges in my bank statement, it's reflecting. But in my cash book, I have not passed any entry. So there is a difference. Say instead of 42,000, you're showing as 37,000. Okay, in the bank statement it's showing 37,000. In your cash book it's showing 42,000. So what will you do? 5,000 difference. Who has taken the fund money? So what adjustment need to be done in my cash book? What adjustment? So cash book, I'm not asking about BRS. No adjustment needed in cash book is wrong. Charges will be added in cash book balance. No. What I've asked, name adjustment. I'm not asking about your BRS, whether you'll add or minus. So it will be debited. No, my cash is decreasing. Cash is going out of the business. So what would be the entry? Bank charges, debit to my cash account, cash or bank account, 5,000. My cash is going out of the business. Okay. So it will be debited. No. No adjustment. No, there should be an adjustment. Charges will be added to the cash book. When I'm asking about BRS, this will be the right answer. What I'm asking, in cash book, in my cash ledger, that is in my bank book ledger, bank charges of 5,000 was not recorded. Name the correct cash book adjustment. Clear? Adjustment. I'm not asking about BRS. So option A is the correct answer. So you will simply pass the entry. What adjustment will you make in your books of account? Pass the entry. But when you prepare a statement, the difference plus or minus when you do option D, whatever. Okay. So in MCQ, you will have 25 questions. So 25 questions, small word can change the what correct answer as a wrong answer. Okay. So next, question number 3. Who prepares the bank reconciliation statement? No. Please, auditors won't prepare bank reconciliation statement. Even financial statements will be prepared by the client accountants. But the fact, if it's a small business, we ourselves will be doing end-to-end. Option B. Luckily, no one told bank. BRS, only bank statement. Banker's job is to provide bank statement. None of the above is wrong. Answer is customer's accountant. His job is to maintain and see the accuracy of bank balance month on month. Okay. And the management will be involved in that. Okay. If you have an internal auditor, he will have a check review. But none of the auditors have rights or their duty to do the any editing options. Okay. So if we go to MNC companies for any audit also, they give us the in an education version. What you say, you can't do any editing. You have the rights only to the view access will be there. So unless you have, if you are an IS auditor, information technology auditor, you can have a white box testing or black box testing. A dummy entry can be passed to check the accuracy. Hence, any auditor will have the option only to view. No person has the option to prepare. Okay. So none of the above is wrong. Banker won't prepare. Option B, customer's accountant. His duty to prepare month on month. Okay. And in this area, usually in big fours, they have a good area. Scope in reconciliation. The person who does a very good reconciliation will be appointed in big fours, mid-size, because they need this type analytical skills also. Okay, to track the errors also. Internal auditor won't do, sir. Internal auditor will review your quarterly base or monthly base books of accounts. He'll give the opinion. Okay. The bank's statement, bank reconciliation statement is prepared by customer's accountant. Auditor, option C is wrong. No auditor will prepare the bank reconciliation statement. It's an accountant, his job, because he has done the accounting, he need to prepare and keep month on month basis. Option B. Okay. So next, question number 4. Bank reconciliation statement provides a mechanism of dash over cash. Yes, internal control. B is wrong. Not a maximum control. There are other areas, okay, other ledgers which gives the control. Only the BRS which gives the internal control. Okay. See, what's the, if I'm an auditor, if you have an outdated check, okay, lying in you past 6 months, 3 months, what's the use for me? I'll give the opinion in my report. That's it. Okay. Whose responsibility? Who will be in their AR, accounts receivable or accounts payable in that team? Their responsibility to collect or receive or collect or pay the amount on time basis. So it gives the internal control. Option C. Option C. So up to here, any doubts? Option C, sir? No? Clear? Clear with BRS? But BRS has a very good scope. Okay. And on this, sure, at least one question will be there. Day book is your day-to-day entry. Chronological order it will be. Whether your purchase, sale, everything will be in day book. So whatever monetary transactions will get effect only in bank reconciliation statement. BRS, bank, either bank or your cash. Differences. Okay. And even the frauds also we can make in bank book only, not in any day book. Purchase, if I give instead of 10,000, 2,000 also, I have support of bids. Please explain one more question, number 4. Okay. Question number 4. Bank reconciliation statement. Yes. Internal control. See, example, what I can say is your aging report. Aging report, I have, see, I'm seeing Mr. R. Mr. R gave me the PDC check. PDC check of rupees 10K. Okay, but have given PDC entry will be passed. Okay, when you go to his ledger, it will show nil account. Okay, but in BRS, you can maintain in tally also BRS. Tomorrow I'll be showing in practical class last. Okay, in that dates you can pass the dates, and even in tally you can maintain BRS. Okay, it will show outstanding. Okay, if this person, if I'm an accountant, I forgot to deposit to the bank, what will happen? I forgot. After 3 months, the check is off after 3 months. Okay, we are normal human being, will tend to forget everything, right? Once if you go out of the office, okay, or someone has been replaced, an accountant has been replaced, he don't know the PDC check is available. BRS is a place where he will get to know. Okay, this is one of the control point or differences. You're getting a minute differences also. Why? The question why? Because your bank statement and your bank ledger in your books of accounts should be a mirror reflection. Okay, I can't do any locha in that. Okay, if any differences, we'll get to know here. Got it? MCQ question number 2. Okay. So what I told is simple question. So I'm not speaking about the BRF. In exam, they have given only so much. In cash book, bank charges of 5,000 was not recorded. Name the correct cash book adjustment. If I've taken simply on the 29th of Feb a bank statement, I saw a bank has charged me 5,000 bank charges. What I will do? Bank charges debit to cash or bank account. I mean bank account. Cash is going out of the business. This is my simple work. Okay. If I have like after I thought everything is correct. Okay. Then I thought once someone the management gave me the bank statement after 15 days after the closing of books of accounts. So that time you are seeing the difference of 5,000. Okay. And he'll ask, the management is asking you why there is a difference of 5,000. Okay. You are showing 42,000, but the bank is showing me 37,000, the bank balance. Okay. Show me the difference, statement. That time you will prepare the statement. Statement is different and adjustment is different. Adjustment, we are passing the entry, that is journal entry. Okay. And so first question, what you're saying, option, charges will be added to the cash book. So this question, if I'll change the question, in cash book, the bank charges was not recorded. Same. Name the correct entry which you make in your bank reconciliation statement, BRS. The question, instead of adjustment, if it was BRS, then option D. But the question is saying what the adjustment which you are doing in your cash book. That time it will be credited in the cash book. I'll reduce my cash balance. Bank charges account debit to cash, cash or bank. Okay, bank balance. Sir, see, cash matlab it's a your bank book. A layman, when you're doing BRS, usually we take bank statement, bank balance as per bank statement or passbook we call. It's just a normal term, but cash book adjustment means cash book is your bank statement. Sorry, your bank ledger in your books of accounts. Debiting in cash book. Bank charges, it's not my interest income. Cash is going out of the business. So I should reduce. My asset is reducing. Then it will be credited. Okay. Yes. I'll share to Sridhar sir and PDF you will receive. A last concept can we discuss? Bank book is different and cash book is different. Yes. Okay. Bank book as per books of accounts. Yeah, actually it is different, but to our understanding, bank cash book is nothing but your bank ledger as per your bank, as per your books of accounts. How could we maintain? How could be the madam JV passed bank charges debit to cash? I mean, it's a bank. Again, I'm saying that it's a bank ledger as per your books of accounts. Okay. So keep in mind when it comes to the term of bank reconciliation statement, if anywhere in the question they give cash book, okay, bank balance as per your books of accounts, it's nothing but your bank ledger which is maintained in your books of accounts, cash book. Okay, if they give us bank balance as per passbook, bank statement means whatever the statement which is generated from bank end. Okay. Yes. Okay. This is one of the old question from CA Foundation. CA Foundation question this was. Okay. So next, small topic. Okay. So what are the professional ethics to be maintained? Please tell me the professional ethics are same for accounting purpose. Yeah, when we do the journal entries, we say same. Okay, bank balance, but we'll put bank balance, cash balance. Okay, honesty. So I'm the management. So I'll say, Mr. Ram, please this time do the sales, pass the entry or my what in statutory 5 lakhs, 10 lakhs. As the actual sales is 2 lakhs. Will you do it? Integrity, security purpose. Okay. Fairness, confidentiality, accuracy. Yes. Objectivity. Yes. Responsibility. Doing accounts time to time. Proper record. Truth. Some management and suppressing that. I'm saying, see, I'm doing black money transaction. Don't tell to others. Okay. Madam, what will you do? Will you encourage, convert for self-assessment? Okay. Accuracy, transparency, reliable. Yes. We should not encourage. Yes, we should not encourage. So, what will happen is, once if you accept, the management will say the more other worst thing. So, you'll be accepting and you'll not have no choice. And your independency will be lost. Okay? True and fair view. Punctuality. Yes. And a science student, can he do the accounting? Without the knowledge of accounting, GST, what accounting can he do? I should have some skill, right? Science student will have a plus and minus, that's it. Whereas if you're a commerce student or some graduate, commerce background, you will know where to debit, where to edit, like credit. Yeah, tally any person can do, but the skills, what about the skills? You require even a skills, care of customer, trustworthiness, at least basic knowledge you should have. So instead of revenue crediting to P&L, if you create a fixed asset, what will you do? Your fixed assets will be in cross together. When you go and if you want to file your GST return, there is no revenue, right? Some accounting knowledge he should have. Guide with law, yes. Yeah, non-com. See, just an example I gave. Non-commerce students are more efficient. They work practically, logically, only with plus or minus. They learn quickly and they'll understand quickly than accounting, which I personally experienced. Okay? Yes, human ethics, communication with previous tax consultants. That won't have happened because already the relation between tax consultant and the client would be worse. So he'll clear his fees, NOC he'll receive. So again, post-mortem you need to do books of accounts. He'll start to know what type of person. So one, you should be independent. You should not come into the pressure. Okay. So anytime, even you will be caught. Okay. So an example, real-time example, which I have seen. Okay, one company? It's a private limited company. Private limited told to an accountant to show the sales as 2 CR, 2.5 CR, 3 CR monthly. Okay. The next banker this side. Bank statement. Okay. Banker this side, he was seeing there is no inflow of fund. Okay, no inflow. Okay, there is no timely payment of your debt. Timely payment of your debt is your loan. When you have taken a loan at bank coding, there is no timely payment. You are paying an installment after 2 months, 3 months. But I guess you should be knowing that once you have a loan or a bank coding debt with any bank, they ask you to provide your GST returns. Okay. In returns, you're showing 2.5, 3 crores, 6 crores, etc. 6 months once, either CEO or MD need to sign and give the provisional financials and aging report. Aging report, they just saw whatever the figures are there. At least if you keep a track, previous reports also, 30% or 50% not realized, okay, in this quarter or in this half year. But majority, you're showing the mirror figures. But where is the inflow? Inflow was the question mark. Okay. Then they started to dig about the company. They had the provision to do the inspection, half yearly inspection. When they inspected on a casual meet, they have not introduced themselves as a bank people. On a billing desk, they went and asked, what is the sales? Just casually, okay, as some friend, Mr. X. And how many how many clients you are getting, how many customers you're getting. Then they told, we have maximum 3 or 4 per week or 6 customers per week. Then this bank got to know. And they started, since it was not paid more than 2 months, they started to give the pressure for the timely payment, and they gave with the list of queries. When you're giving the signed provisional balance sheet was there, when they are saying, when you're showing the sales of 2 CR, 2.5 CR, what is the issue? And the manager directly told, my accountant has done, I have no knowledge. So who will come into the picture now? Accountant. So discipline. So these types of fraud, if the company does, accountant will be in threat. They're saying, I have not done. So when you start whatever the management says, without the knowledge also, you will be in the threat. Okay. So this is just an example. So ethics has strict adherence to the documents. Unless I have sales, particular pakka sales, I should not pass wrong sales. Okay. Show a fake figure, mirror figure, window dressing. Integrity. Integrity, that I should be straightforward. I should say I can't do it. If you want, you will get done from the outside person. I'm not responsible for that. You should take the document. Documentation is important. When your MD or anyone is saying that you pass or you show the sales of 2 CR, 3 CR, get signed on those papers. So you will be on safer side. And you should be honest. Okay. Objectivity. Okay. Not compromise on your professionalism. Okay. Because of bias, conflict. Okay. Today, that person is not good with me. Can I go and say to the income tax department, GST, that this person is doing fraud? No. Okay. Why? You let go. Once is not clear, you should come out of those business. Professional competence with due care. I should have that skill and that level requirement should be there. And I should, like with my skills, I should give a clear picture, okay, to make financial decisions. Confidentiality. Once I am out of the business or out of that premises, I should not talk about that company, okay, because I'm spreading about that company. Professional behavior, not leading to any way of misconduct, okay. A small question. This question MCQ, please answer. Dash is an attitude that includes questioning mind, being alert to conditions which may indicate possible misstatement due to an error or fraud, and critical assessment of audit evidence. What type of attitude should I have? Yes, option A, professional skepticism. I should question. If it is wrong, I should question. Yeah, integrity means same, but professional skepticism is more reliable, like more closer. Okay. Professional judgment, okay, but skepticism is more closer to this. Okay. So, any questions? So, any questions? So, session 2, I have just uploading in the chat. So, today what we have learned. So, from morning session, so we have learned with modern approach, accounting, then journal, from journal, ledger, so trial balance and balance sheet P&L. So, tomorrow we'll be discussing on accounting standards and balance sheet, how to prepare balance sheet. Okay. And preparing balance sheet, I'll be taking a tally. Okay. In tally, I will show, that's it. Yeah, I've shared in the chat box. Single entries will be maintained by small provider, like a small business, and it will be on cash basis. Like simple, they'll come to your office, they'll provide you the bank statement, and they'll say everything I've done in the bank statement, and a small book will be with them. Oh, I paid to Mr. R, Mr. M, Mr. A, so much. Okay. Pakka books of accounts won't be maintained. And in this type of single entry, balancing figure will be my capital. which I'll be doing. PDF I've shared. Again, I will share your session 2 PDF.
Good morning.
Yes. Good evening,
Good
sir.
night.
Good night.
Good, madam. The response is very good.
Okay, sir.
Madam. Dear members, you can post your comments and your feedback. Okay, thank you, madam. Yes, thank you. Punit Piradar, Jafrullah Khan. Yes. Madurai and Tiruchirappalli and Erode people have come. I have come with them for one memorandum of understanding here to the
Okay, sir.
public, madam.
Okay, sir.
Sorry, I troubled you.
No, it's okay, sir.
Krishna is taking care there. Okay, everyone, tomorrow morning, sharp 6 o'clock, you attend. So class will be there. So don't miss it. Okay. Give a big thanks to madam. Thank you, madam ji.
Yes, sir. The PPT is a summary. Okay. So this will give the overall view of the course and the subject. Okay. So actually you need to know in depth your books of account, your study material is very good, and more and more questions also are there. And in your website, tax practitioner of Indian website, you have an revision exam, like what you say, you can attempt an exam in that also. So you will get to know how the exam papers will be there actually. Okay. Thank you. Good session. Thank you, madam. Yeah, mock test papers are available in your website. Yeah, I'll be sharing to Sridhar sir. He'll be sharing in your WhatsApp group. As morning he have shared na similar way. You can 1 second. I have similar. Institute 1 second. I will give the link. Institute of Chartered Practitioner. Yes. You'll be familiar with this screen, right? Students, practical and mock test. There is no need of login for this. Even I don't have a login as a student also in your website. See, please loading it will get. No need of any login, student login also to attempt for an exam. So anyone giving exam attempt in this March, it will be very good to them. See here, which exam you need. Example, I've taken this. Then proceed next. So just pass how the exam is there. Actual exam, here you can see, and you can prepare before going to any like attempt give a real exam. You can prepare here. So see, like these type of questions will be there. A check of ₹500 received from a Shankar was dishonored. Okay, and debited. Dishonored and debited to discount error, discount account. Instead of reversing the entry, I have put to discount account due to rectification of this error. Okay, the net profit will, whether it will increase, decrease. See, dishonor of check, it is of my balance sheet item. Why? It has come to my P&L. P&L received. That time, what would be the answer? You can check. Okay. Calculator, whatever the calculator you required. Okay. And scratch pad, whatever if you want to write, cut, copy, paste, etc. Okay. Yeah, RPL route also will have same. See here. Again, students, practice mock test. Just take any mock test. Doesn't mean only for RPL. Okay. You take any of the subjects. Okay. but it will be very useful because you will get to know your strength and weakness in this mock test. You can revise those chapters or any part. Okay, so we have just discussed few MCQs. Okay, this might not be, this won't come. Okay, unless you give the exam, which will be in different mode. Okay, like same questions on there. But who knows, you can be a lucky, some few questions may arise from mock test paper also. CTPR F1. Might check, should check. They are given like this. So better practice in that. Okay. So any other doubt? Morning class PDF have shared with sir also via mail and WhatsApp. I guess he would have shared in group. Yes, it's just to get familiarized. Okay. Okay, thank you. And tomorrow morning, sharp at 6, we'll be starting with accounting standards. Then following with evening practicals. Okay. So even I'm finding difficult in downloading your what to say notes. Sorry, study material. But this is quite compressive. But you can what last minute revision you can do. Okay. But don't depend on this PDF. PDF is only for your last minute revision. Okay. On exhaustive basis, you need to refer your study material. Okay. Thank you all.